All right. I just shared a tweet that I think it's absolutely essential for everyone to read. I hate self-plugging or talking about something I've done, but a lot of people are probably going to question or try to understand what's happening on the market. I've pinned a thread I wrote yesterday. A lot of people I know have found it helpful, so I encourage you guys to take a chance to read that because I'll try to give you some logic into what's going on with the markets, with the Fed, with tapering, with a lot of comparisons happening to 2018. It's a lot different this time, and I try to break that down in the simplest way possible. So please give it a read. But I'd like to. This is gonna be a very casual space, nothing too in depth. We're gonna have Q&A, so we'll call you guys up so you can request to speak. But before we do that, I'd like to hand it to Luke just to talk, cover the market for the last week and then what he sees coming up this week, and then we can just get into Q&A if you want, Luke.
Yeah, I mean, we can go over last week. Really what we saw was really just a lot of volatility. And a lot of that was, accelerated, mostly acceleration to the downside by these COVID headlines, this new Omicron variant. So that messed with the markets quite a bit this week. And then we actually heard quite a bit from Fed Chair Powell, and those headlines also caused quite a bit of volatility. So between those two things, and growth continually moving to the downside, it just created really just a perfect storm of volatility throughout the week. And I think a lot of that fear was just brought to the surface, almost, you could say. But looking in the next week, I'm really looking into these growth names that have been clobbered. It's just carnage right now in that area. So I'm looking for some opportunities there. I'm looking for charts that are showing some signs of a reversal. But once again, as a technical trader, I'm waiting for confirmation of a reversal prior to jumping in, because you don't want to jump in too early. If you jump in too early, the name could move down another 10. So you need to be cautious. But that's kind of where I'm at on the week.
Awesome. Anyone want to come up, ask some questions? I think we can just get into that, Luke.
Yeah, I think actually Disruptor had a few good things, a few really good threads on DMYQ. Maybe he wants to come up and chat about that.
Hey, Disruptor.
If not, that's fine. We can go through QQQ and SPY.
Yeah, I just added a couple people that wanted to speak. So,
Awesome.
Mike, if you want to start, and then Texas Tech Champ, you can go next. Is Mike still connecting? Texas, you want to go first? Well, Mike.
Yeah, I'll go.
What's up, man?
So here's what's thrown me off on this market is like looking at the 10-year just crashing on Friday. Clearly, people are taking flight to safety. So it just seems to me that there's so much cash on the sidelines right now. Could we expect like a quick rubber band effect? And then the second part of that is I just keep hearing the bears say S&P 500 is still at the top, S&P 500 is still at the top, but isn't that so much weighted towards the Apples and the Googles of the world? Like everything I've seen in the mid-cap growth names, they've already gotten hit 60%. Are they expecting them to go down 80%?
So I'll try to answer that really briefly, and Luke, you can take it. Do you mind muting Texas while I answer, and then you can follow up? So the thread I pinned above actually highlights a lot of what you're saying. But to answer your question, so what you're seeing, there's a lot of different things happening, right? You're seeing a reaction, number one, to Fed's latest hawkish comments. If you remember last year or earlier in the year even, a lot of people were saying Fed rate hikes need to happen. There's a whole dilemma going on between Powell and I guess the rest of the Fed on when these hikes should come in. Initially, it was supposed to be later in 2022. We all knew this was going to happen in 2022. The markets were fully aware this was going to happen. But markets like certainty. That's like a very normal thing to happen. Like everyone, you can trade better, you can invest better when you have clear data that's not going to change, right? So the entire year we were trading and going through thinking this is going to happen in 2022. You saw stocks continue to rally because the rates were so low and there was continuous dovish comments by the Fed. What happened recently was a change in that tone, and that tone became a lot more hawkish, and Powell said that the rate hikes will happen, not only will it happen next year, it'll happen faster. You're going to see a change in yield, obviously, when that happens, right? Because the cost of capital changes when hikes happen by the Fed. So what you saw immediately was, let's put aside the 10-year right now, because I think while that's a very important thing to look at, like yield and cost of capital is very important, I think that's going to fluctuate because now we need to see when the Fed changes. But the immediate thing that happened was growth stocks took a hit. Growth stocks took a hit 30-40%. Like you said, we're at record highs across the index. You can't see it. Broader market, you're not seeing what's happening underneath to the tech stocks that you just mentioned, right? Because those stocks took a hit first, because it's very simple math. When cost of capital goes up, the valuations compress. So that's why you saw immediately the first ripple effect happen to companies whose EV to sales ratio, or price to sales, right? The amount you pay times revenue, which was 50, 60, 70 times for some of these companies, it dropped, it contracted, right? And that's just like normal valuations, right? Like that's how math works. If the cost of capital goes up, you have to discount the future cash flow, you see valuation compression, and you see those stocks come down. Now, I think your next point was about the Apples and some of the other bigger tech companies. Those will definitely re-rate too, but you have to also think about it this way. Like you said, there's record liquidity in the markets, in the sidelines, and what did you see happen in the past week or two? While these stocks are correcting, Apple was ripping, right? So you could easily think of it as people need to, like, think of Apple trading as a bond almost, right? Because people need to store that cash and rotate into something, right? We're seeing a lot of other supplier parts type companies, and even Nvidia, for example, has held up pretty well. So the what you're seeing right now is a rotation based on the comments that we got. What I think is interesting to note going forward, and this is what I wrote in my thread, because a lot of people are comparing this to December 2018, which you can do because this happened in December 2018 when the Fed had its fourth rate hike that year, but then ended up becoming a lot less dovish going forward in 2019 because they kind of front ran the economy. So the economy grew, and there was a lot of different things happening that time, right? So the comparison is valid because we saw rate hikes that time, but it's a lot different. The variables are totally different right now. That's kind of what I'm trying to explain in this thread that I wrote. But as you mentioned, so yeah, I think you're going through a re-rating, number one. Number two, it's going to be important to see what happens in the middle of December when the Powell speaks again on the 14th and 15th. And number three is, how do these big tech stocks react next? Because usually those are the ones to bottom out or drop last, right, in these type of situations. So if those drop, how much do the indexes pull back more on top of that? And what happens with these growth stocks, right? How much are people going to be willing to pay for these companies that are projecting future cash flow that we don't know what's going to happen, right? So it's a bit long-winded answer because it's a very complex topic and a lot going on. But Luke, I don't know if you want to add something to that.
Yeah, what I'd add is that you really, over the past month, if you've looked at the health in the market and really how many names are moving to the upside compared to the downside, what you'll see is that a huge majority of the market has been moving to the negative. Meanwhile, the same 5 to 7, 8 names are moving to the upside, and those are those mega cap names, those Apples of the world. Meanwhile, the rest of really the growth sector here has just been absolutely nailed. So, for instance, you take a look at the NAA 200R, which that's simply a chart of the amount of names within the NASDAQ above their 200-day moving average. You'll see that just 25.75% of names in the NASDAQ are above their 200-day moving average. The rest are below. So it's pretty crazy. You take a look at the health of the market right now, and I'd still consider it relatively unhealthy, considering that you only have a few of these mega cap names really leading the market to the upside. Or I wouldn't even say leading the market to the upside. I'd say just keeping it where it's at, keeping it neutral. Because if those mega caps start the roll, which we did on Friday, we actually saw a little bit of that, but nothing super crazy. Those indexes immediately accelerate to the downside the minute those mega caps start the roll. So to give a little insight, pretty much what I've done, and to be fully transparent, I have actually been, at least on my trading account, I've been all cash for just about 3 weeks now. And I made that move because I started to see even those mega caps start to get a bit stretched. And once I saw those mega caps start to get a bit stretched, meanwhile, the broader market was unhealthy and moving to the downside, that first was a warning sign to me. Typically, that's a warning sign. So I just went risk off. Now, if I get back in, I'm going to be looking for those previous leaders within this growth space to start to bounce or show signs of a reversal. So one of those leaders, for instance, was Cloudflare. So I'll be looking at Cloudflare, and I'll be paying attention to those technicals, and I'll be looking for some sort of reversal, some sort of relative strength coming back in that name. And that's just an example. But what you want to look for to get back in, because you don't want to get in too early. You want to look for that typical reversal pattern. You want to look for that relative strength coming back in these charts. But really, currently at the moment, I look at the market and I still think it's pretty unhealthy. And I think you could make an argument that at least in the growth area, we do see a tad bit more downside. You look at QQQ and you look at that daily chart, and it's definitely not phenomenal. So that's definitely something I'm going to be attention to. Definitely, one key level to watch on QQQ is that 383 level. So that was the previous level that we broke out of not too long ago before the market went to all-time highs. So the exact level, really where it's at, is 382.75. But I'd like to round that into a zone anywhere between 382.75 to 383. So if QQQ can hold that level, and it can reverse at that level, that's actually a pretty good sign. But right now, the charts aren't really indicating that to me. So I'll be looking for it to hold the 50-day moving average SMA. And if it breaks the 50 SMA, I think it could possibly make a move down to the 100 SMA, which is right around 375. But that's just really all prediction. That's all technical based. Whether we actually get that price action, who knows? And once again, we really do not know what commentary going forward, say in the next 2-3 weeks, we're going to get out of the Fed. And we can't really anticipate what's going to happen when it comes to this new COVID variant. That's another risk you need to consider, in my opinion. You take a look and we still don't have data on how the vaccine works on this COVID variant, this Omicron variant. So depending on how that data comes out, that's something else I'll be watching. You could get a sharp move either way based on that data, just a quick reaction, because as we know, the market likes to overreact to everything. So a headline like that could create some short-term volatility.
Awesome. Hopefully that answered your question, Texas. I'll give you a chance to.
No, that was great, guys. Appreciate it. Real quick follow up on the reversal pattern you're talking about. Are you looking at reversal on like the mega cap names, or are you looking at reversals on like the mid caps that have gotten already decimated?
So I'm looking for a reversal in those leaders, pretty much in those mid caps already decimated. And then I would pretty much I almost think of it like this. I look at mid caps and I look at the leaders within mid caps. I look at the leaders within the mega caps. And then I also pay attention to the indexes. And what I want to see is those names that have already been decimated. I want to see some of that relative strength come back, and I want to see those names start to attempt to make a rebound. And then following that, or maybe even leading that, I'd like to see those mega caps also start to do the same thing, because some of those have started to move to the downside as well. And then also, one just to follow, like I keep the S&P 500 and QQQ always on my watch list. I check those charts every morning. I want to see those charts also start to show some relative strength back to the upside. Now, whether we get that or not, who knows? But you want to see these indexes attempt to make a rebound or a reversal on volume. So that's another thing to pay attention to. It's not just about, a green candle back to the upside. It's also about that volume coming back in on the buy side. So that's something else to pay attention to.
Thank you, Luke. Thank you, Texas, for joining. If you want to ask your question next, and everyone else listening in.
Hey guys, do I have the floor now?
Q&A. Yeah, go ahead, Ben.
Hey, can you hear me?
Yeah, go ahead. Ben, can you hear us? Luca, can you hear him?
No, I can't hear him.
Hey, do you have me now?
Yes, I think you dropped for a second, but what's up, man?
Hey, so my question is as follows. So I've been a long-term investor over the last 3 years or so, and I've held an index in the Fang Man, and I've held 2 single equities in Palantir and C Limited, and I'll be an investment banking summer analyst next summer, so I was forced to sell out of those 2 single names for insider trading purposes. So recently I moved to half FNGU, which is the 3 times levered Fang index, and now I'm 50% of the other half in Bitcoin and Ethereum. So given today's market, how do you guys see that working out from here on, or what concerns would you maybe have with that?
So can you go back over those holdings again real quick? So did you just rebrief?
Yep, sure. So as of 2017, I was, 1/3 in FNGU, which is the 3 times levered Fang index, 1/3 in C Limited, and 1/3 in Palantir. Was recently forced to sell C Limited and Palantir for my job. And then now I am 50% FNGU, 50% Bitcoin and Ethereum. So I wanted to get your outlook on both of those from here on out, just given today's market.
Yeah. So personally, when it comes to Bitcoin and Ethereum, I'm long both personally. I kind of look at, in the crypto space, definitely, I look at Bitcoin kind of as just like, okay, if I'm allocating within this space, I'm going to say, I'm going to take, 10% of what I want to allocate to crypto, 10, 20%, and I'm just going to throw it in Bitcoin. Because Bitcoin's obviously, at least insofar, has been one of those big time everyone buys it, like they get in the crypto and they buy it if they're starting out. That was kind of just the move. So to me it's kind of like, yeah, definitely jump in on that, because some people like to call it the gold of the crypto space. Whether it actually is or not, who knows, but it's had a hot streak, it's been trending to the upside, so I'm going to jump in on it. Ethereum I definitely like as well, and you see Ethereum, it's definitely used quite a darn bit in the NFT space. And NFTs are a phenomenon, and they just continue to become more and more part of, you could say, the culture in the space, and a huge part of the space. So I would definitely stay in Ethereum for many reasons. I like it as well. I'm long Ethereum as well. Now 50-50, that is quite a bit of capital allocation to the two. You could stick with it easily. I would maybe look to diversify into some others, but that's just my opinion. But we do actually, a speaker just joined that's much more well versed in the crypto space than I am. Maybe he'd like to speak.
Tony.
What you thinking, Tony?
Yeah, this is actually a good question. I've been thinking about this for a little while now because, I'm super bullish crypto. I'm not really as like bullish Bitcoin just because like opportunity cost reasons. And also I just find that if everything's going to go down, Bitcoin, you've already seen one from 69 to 42K, like 69 to 420, which is obviously programmed. But I think that there's other coins. Like if you look at like Terra Luna, it's like is LUNA, they do some very, very interesting stuff. Like they're basically trying to be just like the globalized reserve currency. And so basically, as people like, this is why I would say this is a better hedge than Bitcoin, or a better even long-term play for the upside. It's like as people sell crypto, like in this recent bear, Luna has gone up because people sell crypto to buy this thing called UST. And UST is the like stable coin protocol on that ecosystem. And so in order to, once you mint UST, so you grow that coin, you have to burn Luna. So it's got this super deflationary mechanism that kicks in higher when there's bear markets. And even when there's good markets, people are taking profits and moving some of those stable coins because UST yields 25% a year with zero risk. And so I think that, people who are bullish on crypto and they like Bitcoin should look at something like that. I would think so, more for that allocation. I just think that Bitcoin has got this like gold standard thing, sure. But if you're looking at just like pure math and like you expect volatility over time and you think that we'll move to like a digital global reserve currency, like that would be probably my new play, because it just seems like the right move, right? Because it's like the crypto market crashed a bunch, Luna ripped because people were moving money from coins to stable coins. And I think that, if you've got 50-50 in both and we get one of those 50% drawdowns, which we're like already at like a 30-40% drawdown, you'd be happier to have that in your port than just Bitcoin, even though it's like quote unquote safer.
No, I think that's a great answer. And just for some context, I started with like, as little as hundreds or maybe even $1,000 of my brother's money. And I traded options with it and did really well. I got pretty lucky, I guess to say, on the time of the market when I started. But I've built it up to around like 60,000 or so. And now I'm trying to decide the allocation of where I'm at right now, having to sell out of the two equities that have been great performers. So I'm looking for like a 50% split in equities in crypto, but I guess maybe Bitcoin and Ethereum might need some revisiting, and maybe like Ethereum and Luna might be a better 50-50 split than Bitcoin and Ethereum might be. So I appreciated the answer.
Yeah, I think that's great for the hedge purposes, because like if all crypto continues to tank, which like I don't know how much longer it'll tank, because this is all based on the Fed and this is tax out. This is like 40 things happening all at once, which is causing a liquidity trap all over the world, which is like definitely being seen in equities and crypto as well. But I will say that Bitcoin, and like I was in crypto in like 2016, and back then the only coins that you could even have any semblance of safety investing in were Bitcoin and ETH. But it's a very different like world today. Like I'm very bullish on Solana, Avalanche Network, Cosmos, Atom. There's like a lot of different layers that are coming out that are doing very, very incredible things, and like we're not even touching on decentralized finance and what's going on there. Yeah, I mean, I think that these dips are those perfect opportunity where if people are holding Bitcoin, this is like, Bitcoin goes down 30, but Avalanche is down like 50%. Those are things to like start considering. Maybe I want to like put small allocations to those new layers and those new projects that are still within the top 30, very reputable coins, but have a higher upside over time.
Yeah,
Yeah,
thanks for
not-
the answer. I'm just a bigger fan of making bigger bets and less diversification. So I think Ethereum and Luna might be a great play at doing both without having to own a lot of names. So thanks
That
for
would
the
be my
answer.
way to go. That'd be my way to go.
Yeah, thanks for the answer, man. I
Sprinkle a little
appreciate it.
AVAX, and then you're good.
Thanks for asking that, Ben. And yeah, I mean, I think we have some more speakers, but before we let anyone speak, I think just add to that real quickly, Tony. I think the fact that you mentioned these other coins, I think also you're seeing, because I've been in crypto similar to you, 2017. You're seeing more layers. Sorry, more use cases with these layers that you mentioned than you did that time. That time was, oh, this is gonna happen. This is how ETH will work, and now you're actually seeing those use cases play out. So definitely a very interesting time. But again, these pieces are this space is going to be very casual, so please come up, ask your question, be reasonable. We're not going to tell you what to buy and hold, nor are we going to, answer any trading room questions or try to come and pump your own room. So we're trying to help people out. So just be fair and ask with the right mindset. But I think before we get into that, Tony, do you want to just give a quick overview of what you think of what's going on in the markets? I mean, me and Luca covered it earlier, but I don't know if you have anything to add. I know people love hearing your take, kind of what's going on.
Yeah. When you have a water hose and the water hose is completely open and the spigot's just pumping and you got the water spraying, and then you close the hose and you put a kink in it and you slowly start to kink it, and then eventually the water stops. That's that. So you can think of it as like a liquidity trap, because the only names that have not gone down are the names that have infinite liquidity, is like Apple and Amazon and Google. And so, and you look at every other name, sure, like, a lot of these names are completely oversold, and it's a joke right at this point, because if you think, like, we've had, what is it now, like well over a year and a half since we started pumping the Fed started pumping the markets, and those companies have changed a lot in that time. I think what Mealy's at the same price it was over a year ago, though it does like double their revenues, and it's just, those things are not anything to do with fundamentals about the company. Like, I trust trust me right now, nobody's looking at the price to sales. Like, people are like freaking out, like, oh, it's so cheap. Doesn't matter. It will not matter until it does. And that's just because you've got tax loss selling that hopefully, and this is what I was thinking, hopefully ended December 3rd, which was Friday, on the biggest winners and the biggest losers. Because if you're worried about next year's cap gains changes, you're going to be selling your biggest winner now, right before December 3rd. So you have a 30-day wash rule to buy it back on January 3rd when the market's back open for next year. So if anyone's selling it, like, anyone who has big money and is somewhat intelligent has sold now. And like, if they're managing hundreds and hundreds of millions kind of thing, or more. So they sold now in order to be able to buy back next year, because if they buy back next year and then they hold it for X amount of time, and let's see what happens. But hopefully the cap gains don't change too drastically over time. But that is what they did for this year. And then you've got, of course, COVID hitting at the same time that the Fed is trying to be deflationary and they're slowing taper. And then you've got the different members on the Fed trying to say, well, let's accelerate the taper, as soon as they just said, let's start the taper. And then they're, well, actually, instead of just raising maybe once at the end of the year, maybe we're going to raise rates a couple times next year. So basically it's 2018 again. And it's absolutely shocking to me that the S&P 500 is not at 3,500. But I think that we're going to be seeing a lot of this coming weeks of just distribution and settling out. Like, you've already seen it so much, but eventually there is a place where things will flush out and bottom. And like, if you haven't seen that, like, SC and Twilio have dropped like 40% and 50+%, Mealy's down like 50%, Roku's down like 50%. Like, any of these quality names that did run, very high are down 50% in short order. Those things don't last unless those companies are going to be done for like ever. So, I mean, it's going to not be fun, I don't think, for the next couple of weeks. Like, it may even last longer. We may have that 2018 thing happen at the beginning of next year where markets dove 20-30%. So, I mean, that's why I was screaming on the podcast. I was like, the market looks terrible. It's like absolutely disgusting. It truly was.
You've actually been saying this to me since August.
Yeah, I mean, I didn't think it was going to be this bad. I knew it was going to just, I
You
knew
know
it
what,
would crash,
Tony?
but not
So
like this.
the thread I wrote yesterday, which I think you really liked a lot, and I was telling, that's why I opened this space with, I've pinned it above, and I think, to summarize it as best as possible, I think the Fed honestly kind of puts against the wall by not really putting a clear answer into next year. And what happened is inflation just kept running, and Powell had nothing else to say but to say, retire this word transitory, because it's here to stay. And this is one of the few things the Fed can do, is raise rates. That's one of the only options the Fed has to control inflation. And I think Powell was just trying to be a lot more accommodating than he needed to be, because he didn't want what happened in December 2018, and then even in 2013 when Bernanke did it. So he was just trying to be, I think, a little too nice to the markets. Let's put it that way. And I think what you're seeing now is that he has to actually potentially catch up or have more rate hikes potentially, and that's what's really driving the markets down is what we're seeing. So yeah, it's definitely very interesting, and I know you've been screaming this since August. A lot of props to you. I think we were calling you crazy that time, and literally what you were saying then is
Dude,
kind of what's happening now.
when FinTwit's holding net at 220 and saying I added a dip that's 5 points down, I'm not gonna make it, man. It's just like how the markets work. You know, things. I remember this like since I've been investing like all these years. Everything I've seen is like there's times where I'll like look at my watch list and be like, sheesh, these things are pumping. And then I'll look at my watch list and be like, gosh, this is disgusting. And like it's getting to that point of like, gosh, this is disgusting. So, you know, and what you said about Powell, that's like, you know, it's important to know that there was not much that he could do. And I think that honestly, like this is not political, but I'll put a lot of flack on like the administration right now because of how they're handling gas and everything. I think that there's a lot of issues just between the Fed, the administration, and everyone handling these like economic issues at the same time.
Tony, you know what it is also? It's COVID, like you just said. Exactly. That's what it is. No one wants to be the bad guy, right? It's kind of always what you say, right? The good guy becomes the bad guy.
Every single thing is deflationary. Tax down, super deflationary. Cap gains change up, like super deflationary. COVID, super deflationary. Taper, super deflationary. Like yield spiking, super deflationary. Rates going up next year, super deflationary. So like this is what happens when the liquidity trap happens. You have events that happen. No one has any money. Nobody wants to buy this garbage when you realize all these stocks are garbage, like especially at these prices right now. And that's what happened. And like you know, you still have a bunch of names that are trading way higher, and that's just because it's not because you picked the right name. It's because the bigger guys picked the right names and you were in them. And I want people to really understand that. Like like that's really true. And like it's gonna hurt a lot of investors' feelings, but like you didn't. It was the people who had hundreds of millions and billions who decided to stay in those names, which is why you're in those names that are not down.
Yep, no, fully agreed. I want to continue the questions. Anonymously, Boston, I think you were next, and then Michael, and we'll just keep going down. Feel free to request to speak. I'll see you, but I can only add a few speakers at a time. So, yeah, go ahead, Boston.
Yeah, I had a short question. I was just wondering, so in terms of like the SPY and QQQ reversal, I heard you guys talking about volume. What time frame do you guys watch to see volume?
Yeah, I'll
Tony or Luke, you want to take that one?
Yeah, I mean, I go anywhere. Just like I always watch daily volume. I like to watch volume at the close for like names, certain names. Like I don't know if I look at like the necessarily like SPY or like QQQ volume, unless it's like on a daily kind of situation. Just like some of these names, like if you noticed, I think on Friday they did start having like a little bit of like strong green candles towards the end of the day, and like it's starting to be more relevant each day. So you're seeing that at the end of the day, people are starting to like buy back the disgusting dips. But you know, in the morning, this overwhelming sell pressure just hits anyway. So I mean, volume is important on like multiple charts. So I definitely like at least the daily. Yeah, that's what I usually look at.
Okay, thank you so much.
Luke, you want to add anything there?
Yeah, I could jump in on that. And I'm very similar. So, you know, on SPY and QQQ, I pretty much watch the daily. And then I watch, I also typically keep like the mega cap names always on my watch list, and I watch those in the EOD. So I'll watch, you know, like the Apple and Microsoft and Amazons of the world. I'll watch and see, you know, at the close, is that volume coming in? So I typically have actually 3 time frames up. I have the daily up, the 4-hour up, and then the 1 minute up. I'll occasionally have the 5 minute up, but not super often. And I look for volume going in the close and volume at the open. And typically, what I like to see, and you know, Tony noted it. If you're going in the end of the day and you start to get those strong green candles, volume backed, that's definitely a positive sign. So that's something I look for, and we did see some of that on Friday, so that was a net positive. But typically, what I do is I don't only watch the broader indexes. I really like to watch QQQ. I've just found that it works really well for the way I trade. Just keeping that on my watch list and checking that daily. But I look for volume really across the board. So I kind of gauge it almost. Like I look at the leaders in the market and I pay attention to what volume does in the AM and the PM, open and close. And then I also pay attention to the broader index. But that's just kind of me. I'm one of those people, whether I'm analyzing something fundamentally or technically, I kind of bring in quite a few almost think of it like a checklist, quite a bit of factors, and then I kind of go down the list and check them off, and then I just kind of gather a general consensus. But that's just kind of the way my brain operates.
Awesome. Thanks, Luke. Thanks, Tony. Michael, you want to ask your question?
Yeah, I was just wondering y'all's thoughts on Ethereum, whether the short-term bottom may be in or not, and how y'all kind of track that.
I don't chart, so I'll let Tony answer from a technical perspective. But from a crypto perspective, Ethereum's my biggest allocation. I think has proven its use case already. I mean, you're kind of seeing it play out as we speak. And I think, as Tony mentioned earlier, I think Bitcoin is more of the gold. Ethereum is going to really empower kind of the future of Web3. And I think you can make the argument for Solana as well. But I think there's going to be multiple big players. It's still very early. But in terms of price action, Tony, I don't know if you're watching the charts on Ethereum.
Oh, yeah. I mean, I watch the charts and honestly, I'll buy ETH anytime it's under 4K. But and I was buying ETH anytime it went under 2 and under 1, whatever. I continue to add to it because I know that's most people's biggest bag and the most widely accepted use cases, and many layers are built on that. Most layers are built off of that. But in terms of price action right now, this is a zig when they zag moment in my mind. January 1st comes and you have everybody who's been wanting to open crypto funds and wanting to get crypto this and that open. They buy the hell out of crypto on Jan 1. And I can't let anyone else convince me otherwise. I'm very, very, very strongly in the belief that, that we'll have even more fund flows than we did last year. Because January 1st of last year, I was literally texting some of my hedge fund buddies and they were like, we're just slamming Ethereum to the moon right now. And it's crazy. These people, they wait till Jan 1 because they have to, get these structures in place and whatever. And other people are doing the same thing. You see all these new ETFs come in and out. And people were just swimming ETH and they were like, yeah, we're up 30% on ETH in 2 weeks. And everyone's just continuing to pile. So I think that, as much as we like to talk about the fact that decentralized and cool stuff, the big boys have come to the show, So January 1 is probably when I think that we'll start to run really hard again. This selling right now is not real selling. This is liquidation. This is people being degenerates and being really stupid and not knowing how to manage their risk in ETH and crypto and blowing themselves up. And then people buying at psychological funny stops, which is everyone shorts at 69 and then they buy at 42.0. Okay. So I don't think I'm very bearish in the slightest. And I know that people want to assess this drop to COVID and inflation and I don't think it's even relevant. Sure, it's what got it here. I will not dismiss that because without inflation, without the Fed pumping and everything, you wouldn't have had people look so hard to crypto for that hedge. But now, once quote unquote bunny ears Ponzi's get big enough, they stay big. Look at the S&P, you've got 6 stocks, or NASDAQ, you got 6 stocks that make 60% of it. So yeah, I'm very, very bullish crypto right here. I'm honestly just, I add every day.
That's cool.
That's your question yet, Mike?
Yeah, that's awesome. I was adding dips on Friday at work, but sounds like we'll run it back on Jan 1, huh?
That's what I'm thinking. I mean, if you look at the candles from last year, people were front running it into January, but it's also only December 5th. I wouldn't be surprised to see this in a week or two. People are going to be wait, how did crypto bounce so hard? Wait, this wasn't real. We're not going to zero. And then, I mean, I just would not compare COVID, the reversal of the COVID effects of monetary supply and everything to the drop that'll come in crypto. Because as that year and a half of running has happened, look at the difference in crypto. You talk to any person, you go to your grocery store a year ago, they'd be like, oh yeah, the thing that they use for drugs and stuff and criminals. And now they're like, holy shit, I just bought Shiba. So,
Sweet. Thank you, man.
Yep,
Anytime.
you're welcome, Michael.
Hey, Tony, my follow-up to that is where should we be buying Ethereum and Luna if Coinbase doesn't offer Luna? Luke recommended Binance or Crypto.com. What do you recommend for someone like Michael and I?
Hold on, Ben. I think we already answered one of your questions, so we'll get back to that. I think there's a lot of people that wanted to ask something before that. So, Jared, if you want to go.
I can just answer really quick. It's just Crypto.com has a ton of, a lot of great stuff. I use that.
Cool. Thanks, Jared. Go ahead.
I actually had a very similar question. I have Binance US and been listening to you guys for a while. Hear you talk about various different coins. They're not all able to be bought on Binance. Is there any one marketplace specifically that has all of the coins and cryptos that you guys and everyone looks at?
Nope. And you should be happy because that means we're early. It's I have like 6 or 7 different brokerages on crypto because like I need to buy, like I'll buy Avalanche. Like I couldn't even buy Avalanche on Binance yesterday, so I had to go and use like I use some like not necessarily super safe sites just because they have like coins that can't get anywhere else, like Gate.io. That's good for a lot of like small cap crap coins. But one thing I would also say, like, I feel like this is like maybe another layer deeper. You can swap into pretty much any coin using like dextools.io, Dex Screener. Like those are like you can connect your wallet to that site and then you can swap out, like if you have like wrapped ETH or whatever, you can swap out and hold those in your wallet. If you're looking for like where to buy and hold them long term, I use like crypto.com, Coinbase, Binance, and KuCoin, and like that usually gets me what I need. And if not, like I don't know if you're familiar with like Uniswap, but Uniswap you can pretty much also swap into any coin you want. And then once things are in your wallet, as long as it's like an ERC20 token, and you can send it to an ERC20 address for like safekeeping or another like brokerage or something, then it's okay. But like for example, I was trying to buy Phantom last night for this thing. I literally watched this coin go from 7 to 200 in front of my eyes and could not swap out. So it's a good question, and like I would recommend like looking and seeing where you can buy all those different things because stuff moves so fast that if you're trying to like buy something and you don't know where or how to, you know, like I would have multiple accounts set up anyway.
Cool. And do you think we need a crypto wallet? Because I don't know, Jared, if you have one, but I don't. And I buy my Ethereum on Coinbase. I was looking for somewhere to buy Luna, both for long-term purposes.
I think you could have like a MetaMask. Like, I don't think there's anything wrong with a MetaMask. I would recommend you having a hard wallet. You know, because like I keep a lot of crypto like loosely messing around, whatever. But I have a hard where I keep my big bags and I keep sending money to there all the time, just because like no one will ever touch that. And like I've clicked some bad links, and there's definitely times where I've clicked some links that could have taken my entire wallet. So yes and no. Like I would say use wallets for higher risk things like NFTs or swapping into random coins or even like DeFi. But once again, like if you get like big enough bags or something, you can still move that onto a Ledger Nano X or a Trezor wallet. And those are like those hard wallets that they have a private key, and you just, those are the safest possible things you can put your money in.
Cool. Thanks for answering that, Tony. I see we have a lot more questions. Greg Goki, if you want to go next. What's up, KT? I added you. If you want to join in on answering any of this.
Yeah, appreciate it. And Tony and team, thanks for everything you guys do. So Tony, you kind of touched on this. So if you look at like Peru, he's saying the market, we have this liquidity crisis, you know, we're into the QE cycle. You look at Kathy Wood, she's saying that we're not in a liquidity crisis. Obviously, we don't have a crystal ball here, but can you dive in deeper that if Powell continues down his trajectory, do you see that we're going to continue to be in this liquidity crisis going into like first few months of 2022, or is this just all short term? It's a tough question, but
yeah, I wish I had a crystal ball, but like I think you touched on a good point there. It depends what Powell does, and honestly, it depends what Biden does too. Like the issue here is that the administration is not working with the Federal Reserve, and like as much as they're not supposed to, and as much as the Fed's not supposed to look at the stock market, no, they do. Like all while Trump was in office, it was definitely like everyone was looking at the S&P every single day when they woke up. So I think that if Powell leads the tapering and presses it, like I mean, I just don't know which is going to be worse, right? Like super rampant inflation. How do you even stop that? Because once again, once the Ponzi's big enough, it doesn't really go down. So once your milk is $10, your milk is $6. So I mean, while I do think that Powell should be doing this, like I don't think they're going about it in the right way. I think that they should say like we're going to slowly do a taper, because even just saying that we're doing some type of taper is look at like what's happening to stocks that ran because of
Tony.
like,
yeah, no, I think to add to that, Tony, I think what's really I think driven part of this, and sorry to kind of just jump in there, but I agree with you that he should say it slowly. But I think what's happened here is his tone, right? Because if you look at it, like the markets, they literally fluctuate the way, the tone, the emotion Powell carries, and I think what's happened is he's changed his stance from the slow and steady markets will be all right to we need a faster taper. And it seems to me that's happened a lot more suddenly than people had expected, even though people have been pressuring him to think this way for a while. And that's why I think he's actually, I really think no one wants to be the bad guy here. Like I think that's the reality of the situation, that who wants to be the guy becomes to say, a bad guy, yeah, good guy becomes a bad guy, because who wants to be the person to say, I screw the markets during the biggest pandemic in a century, right? Like who wants that title?
I don't know what the hell. Okay, I don't like. Yeah, I totally agree with you. Like Powell had honestly done everything right previously. Like, I don't know what Biden's doing with taxes right now. It's belligerent. And I don't know what's like Powell and all the Feds are all like every piece of the Fed, every member of the Fed's coming out and saying like their different perspectives, and they all sound like very, very like contractionary. So like, you know, Powell's like, we have to retire the word transitory. That means everything you said for the last year and a half is bullshit. Like saying that, you know, Meister and like all these other guys on the Fed are just saying stuff like we might have to accelerate taper by the end of Q2. And so obviously everyone dumps now because I think they're thinking that like if we're expecting, you know, think about this, Rahul, market's 6 months ahead or something like that, whatever. You know, I don't even know these days. The market's just actually pricing in news too quickly. But if you think that, you know, we're expecting the end of tapering to be like Q2 and then rates and everything are coming, why? It's like makes me want to just short everything to zero. Just it's hard to think about like a situation where you walk the line so delicately and properly that it ends up being a good situation. Like,
yeah, no, this is literally what I was writing about yesterday when I sent this piece to you on this thread. I was just like, dude, there's so many events and there's so many variables that it's no one knows. And I think one of the biggest things that you're also seeing is the biggest liquidation from some of the smartest people in the world. Like Satya Nadella just sold about half his stake in Microsoft last week. You've had Elon and Bezos liquidate almost monthly at this
Elon
point
called
this
the
year.
top.
Yeah, Elon called the top.
The entire room.
Chamath called it on the All-In Pod a few weeks ago. So this is like, you know, you're seeing so many different variables in terms of inflation, massive liquidity on the sidelines, massive liquidity and participation in the markets, capital allocators not knowing what to do, so they're cashing out because they're seeing record runs and they need to preserve their capital. You're seeing a growth in all like massive technological change that's happening and being accepted and widely being moved on. You're also seeing no yield anywhere. So where do you invest? So that's where you have people invest in the markets. You have more retail,
DeFi.
real. So there's just I mean, there's just way too many, right? And you have a national pandemic going on, right?
Yeah,
No
and you
one's
have an
ever dealt with
entire
that.
new asset class sucking money from everything that's happening already. Dude, it's like it's a bad situation. Like
Yeah,
I was saying it was bad earlier, like on like 2 weeks ago, 3 weeks ago on the pod, and like I've
Yeah.
been saying it for a while. People are like, Tony, why aren't you pounding new names? Tony, why aren't you super bullish? And I was like, what are you bullish for? You know, it's not
your
the same market as
prediction
last.
already pretty much happened, right? S&P 5,000. You said that for 2022. It's almost basically there.
Yeah, it was like 4% within 5,000. Like
yeah, exactly.
I'm right enough. Like, and then COVID hit. So
yeah, you said that. I think the date you recorded saying that was September 2020, if I remember correctly. It was 32 S&P bottom at the end of September.
Oh, yeah.
Everyone was freaking out that time, and you're just like, gun to my head, S&P 500
just math.
still.
I literally calculated how much the Fed pumped, and I calculated how much they had pumped before COVID hit because they started pumping again. And then that's when the market went from like 2,800 to like 3,500 and stuff.
Exactly.
So the math just worked out. And when it said 5,200, of course, like you get to give or take 10% for COVID tax selling capital gains changes.
Yeah,
but,
exactly.
You know, and that's the crazy part, Rahul. You look at the S&P 500, you would never know that everything under the hood is disgusting. But I have I'm gonna add some tweets or I'm gonna send them to you. But found some really like interesting tweets just showing the breadth of the market.
It's insane. I don't know if KT or Luke, you guys want to add anything to that, and we'll take some more questions along the way.
Yeah, I think Paul's comments are pretty hawkish, especially when he says, I'll retire the word transitory. Also, the other part is where he says he didn't factor in the supply chain problems. I quite didn't get that when he said that. And I was reading that transcript. And I was like, what are you even talking about?
Like, was he not paying attention for the past 6 months? Like, when
exactly.
used cars have gone up dramatically.
Exactly. So that was kind of mind-boggling to me, and that kind of led through the market, I feel, and that is what is creating this downturn and that turmoil that we are seeing right now. But overall, like what Tony has been saying, it is pretty bearish, and it is worse than the taper tantrum. The only other scenario or the bullish scenario that I kind of am talking about right now is the NFP payrolls, right? Like the only other thing that like Powell has been talking about and stressing on was employment, and NFP payrolls was it was kind of bad, I would say, inclined bad to good, I guess. But if on December 14th on the next FOMC they decide this is not as great and we might have to slow down our tapering, and if he comes out and says that again and says we don't know the effects of like Fauci, nobody really knows what this new COVID variant is doing.
What he needs to do is just be more clear And I
Exactly.
Yeah,
think he
he
needs
needs
to
to
literally lay it out. Like, this is when I think the first, because he did that the last meeting. He said this, we
Exactly.
expect 2 hikes. I think what happened is his way of approaching this entire situation just flipped, and everyone just like, what the hell's going on?
Yeah.
And you had the
Powell got
variant.
caught off sides.
He got caught offside, and you had that variant hit around the same time. And
Right.
Tony, I don't know if you believe in any conspiracy. I mean, I believe in COVID. I'm vaccinated, so I'm not against anything, and nor do I look into this stuff in depth. But the timing of it, dude, Omicron to hit the day
Yep.
after Thanksgiving,
Dude,
like when there was no
narratives can
news
push
going
very
on,
well. Like
it's
that's
insane.
all I'll say. And,
Were
and,
we
and
guys?
I'd be shocked to see, like, it almost seems like what else could go wrong. It's like you've got markets in turmoil.
All at once.
Yeah, all at once. And so, like, that is the conditions for a liquid trap. Like, and the problem is now the only way that this slows is by, like, I think Powell is very clear on how he's going to do it. I think he has to walk it back. And
I
if he
think his
walks it
last
back,
meeting, he
man,
screwed it up so much that no matter what he does now, he can only make things worse. I feel.
Yeah.
He can't
If he
really make
walks
it
it
better.
back, we dive because there's no credibility in the Fed. If he doesn't walk it back, we dive because the Fed's already screwed up.
Exactly, and we already front ran that he's going to stay hawkish, so let's just dip now. So yeah, insane. But we've talked about the Fed quite some time. Thanks for jumping in on that, KT. I think Luke, you wanted to say something before I take some. Again, everyone, this is a very casual space. Thank you for taking out time out on Sunday morning. Thank you to Tony, Luke, and KT, and to jump on because I know we've got a sling of questions coming in our DMs about the markets and what's going on. So we just wanted to use this time to take some time out of our weekends to help wherever we can, because again, we're not perfect, but we're trying to build this community of pounders, and we want to help you guys out and answer any question and hopefully help you manage your risk, because the last thing I want to do is people lose money they can't afford to lose. So feel free to come up, ask questions, and we'll definitely take on that. So I think, Chris, you were next, but before you speak, Chris, Luca, I think you were waiting to speak, so go ahead.
Yeah, I mean, I pretty much agree with all the commentary we just went over there when it comes to the Fed. What I do is I go through the headlines. That's part of what I do for my pod. So I go through the headlines today, and you noticed, the shock was very noticeable after Jerome Powell came out, and he pretty much did like a complete 360 on what he was saying just a month prior. It's crazy. He went from, we're going to do this gradual taper, and it's going to be at nothing, super quick, to this. The economy is, unquote, he said, at this point, the economy is very strong. Inflationary pressures are higher. It is therefore appropriate, in my view, to consider wrapping up the taper of our asset purchases, which we actually announced at the November meeting, perhaps a few months sooner. He goes on to say, I expect that we'll discuss that at our upcoming meeting. So he went from, the labor market's not there, the economy's not there, but it's close to there, just a few weeks ago, to everything is strong and we need to, speed up the taper. I mean, I think it just took the market by, I think it shocked the
Caught everyone
market.
in surprise, yeah.
Yeah, I'd say one thing about like unemployment and all this that I think that I don't know why we use that metric anymore, to be completely honest. Like, I think there's a ton of people who are just like self-employed, making money, like trading on their own at home or doing crypto or doing this and that on their own. And I don't think that like it's as representative, of what's really going on. So I think that it's like hard because like you look at, 250, it was supposed to be 500,000 payrolls and then it's 200,000. And so like, you see like there's this discrepancy every month, but then you see like certain spaces get bigger, like online gaming and online like game development, coding and like those things. I don't think that people realize are not as like, yeah, sure, some people will get 1099s and stuff, but like a lot of that stuff is not necessarily accounted for. It's very under the radar. Trust me. So
Yeah.
I feel like it's really hard to quantify employment when I know that my generation is richer than they've ever been, just because this is like the time where if you are a young kid on the computer learning to game and stuff, you're making usually more money than more money than you were making 10 years ago or 20 years ago when you didn't have the internet. So
I mean, me and Luca were literally talking about this on Friday night when we started investing. I think both of us started around 2012, 2013. But, Luca's a little bit younger than me, so he was in high school. I was just starting college, or actually just leaving college around that time. And that time, you had to pay these $4.99, $5.99, fees to make trades. And we were just talking about how much more careful we would look into things, because we're just like, you don't want to make that trade and then have to pay that $5 extra just to make another, I guess, dollar cost average or whatever. So, Luca's a trader, so he's moving things a lot faster. I'm more long-term oriented. So for me, anyways, it was just, let me just buy and hold, and then I just all cost average. But even those $5 fees used to be like, I don't want to do this unless I'm fully sure. So it's just crazy. In the past decade, the amount of liquidity, participation, interest. I mean, you're seeing record highs in retail participation, Robinhood downloads, and also just the fees has changed the whole, I think, game, I would say. But I think we have so many questions coming in. Chris Patel, I'll pass it to you. We've been on for an hour. We'll try to keep this running as long as we can, but I don't know if we'll get to everything, but we'll definitely try. Feel free to request to speak. Just be responsible. We're not going to give any buy and hold recommendations. It's just our personal opinions on what's going on. So, Chris Patel, go ahead.
Yeah, you know what? I wonder how much of this talk, how much of what they're signaling is just talk rather than action. Because I think what they could have done is to say, you know what, instead of talking about it, we could start to raise rates or taper significantly. But instead, they're like, you know what? Maybe if we just signal, maybe that'll like get the markets to self-correct rather than us having to take any physical action. So I think a lot of it is probably drawn to that. And I don't know. And I guess we'll see over the next 6 months how the Fed actually does, right? Because I have seen in the past where the Fed will talk about something just to kind of like get the market to do what it wants to do. Because I think overall they knew that the markets were kind of overvalued right now, but like, okay, how do we do that without affecting mainstream hardcore? So I think a lot of it is just, hey, let's put the news out there saying, you know, we're not as confident as we were before, and the markets will self-correct, which tends to happen, and right. And so now I think we're self-correcting, and I think a lot of it, a lot of times people take rhetoric as pretty much as gospel, and they don't realize that, you know what, right now is just a good time to just wait and hold and just pretty much clean up afterward.
Yeah, I love that. That's super
Thank you.
5D.
Yeah, thanks for sharing that, Chris. I don't think you had a question. You were just sharing your comment on the
Yeah, I
market.
was just
Right?
sharing.
Really good point.
Okay, cool. Yeah, no, feel free to stay on if you want to chime in. But I think the next person in here was Xanderbond. Xanderbond. If you want to speak, and then Novice, you can go next.
What's up, Xander?
Hey, yeah, I was just wondering, Anthony, I know people have been talking about Ethereum, the flippening of Bitcoin, and I was just kind of wondering like how you were divided up. I know you said you were buying different cryptos like on a daily basis, because I was just kind of thinking a lot about like the flippening of Ethereum by like Phantom and Atom and Luna and some of these other, tokens that in my opinion are more useful than Ethereum.
Yeah. I think this is a couple layers of a question here. First, it's like it's taken forever for ETH to even get like in the perspective of possibly flipping Bitcoin. And so if you just like trickle that down, it's going to be at least 4 to 5 years before something gets close to flipping ETH, in my opinion. Not to say that, and like it'd be very, 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 very like low IQ of me to say that ETH can't get flipped, because it definitely can. It's like if someone tells you that there's no way Bitcoin can get flipped and there's no way ETH can get flipped, that person deserves a block, because it's not true. Like anything can get flipped. The technology where 1999, do you remember the stocks that were on the market that were the highest valuation like tech stocks? Like half of those aren't around anymore. So like not to say this is a similar situation, but I do think that like there is a potential for, like, I was super bullish like on Luna since this protocol changed last week. I was just aping in every day. And like one thing that I would say, like in just terms of my strategy, and like I'll break it down, is like I put the majority of my funds like during the NFT peaks, and like I still have like a good amount of NFTs, but during the NFT peak when cryptos were down, because as NFTs go up in ETH value, it's because ETH usually goes down in dollar value. And so I switched a lot of that into decentralized, like DeFi. So I was doing stuff like Wonderland Time, like Strong Nodes, and there's various other like DeFi projects. And then UST protocol, which is on Luna, and that gives you 25% APY. So like I split up my DeFi like a month or two ago, and then every day I get passive yield, and then I just buy coins every single day. And so I like take my risk out by buying quality coins. And what's nice is like, and I know everyone knows this, liquidity is king. And the worst thing about down markets, crypto stocks, whatever, is having no liquidity to buy the dip. And so I would say, like, first of all, like focus on a passive income source in crypto, whether that is just like, staking your ETH for 20% or whatever, whatever it might be. Look for a passive income source. And then I would say, I hold 0 Bitcoin, and I just won't, like, it's not worth my time. Like I bought Bitcoin when it was like 1,000. I wish I would have held all of it, but yeah, I'm not buying it at 60,000 or 50,000, just because there's so many other different coins that are coming out. So I'd say ETH is still my number one. Like ETH is like buying the index fund. That's like buying the NASDAQ. It's diversified enough, and it's like strong enough that you don't have to worry about it going to 400 or whatever, in my opinion. But then like I think that during this dip is probably generational lows for some coins. And people probably think I'm crazy for saying that, like, oh, we're only pulling back a little bit. But if you consider, like, I don't know if people have seen, or I wish I could find this thing so you could post it on here, on like tag it on here. But The amount of
Yeah,
private
can you send it to me?
yeah, I'll find it. The amount of private capital that has gone into crypto in the last month, just the last month, like this is it has nothing. Forget tapering, forget the Fed, forget inflation. Is this just like there's another stock market dependent on itself? That's what this is. So like I'm super bullish ETH, AVAX, Solana, Luna is honestly I might be the most bullish on Luna over everything at this point. Just that protocol change is just too genius, and like it'll help you in the world's like worst situation. Like in the huge crypto crash, people will move towards dollars, which will rally Luna. So I'm bullish on stuff like that. I also say there's like a lot of new small coins that will come out and be huge. Rahul, this is not what I wanted to send you, but I'm going to send you this just because this is probably like this has most of the coins I like on this. Just and it shows you why, because it's all about usage.
Yep. I think
do you like how do you like Cosmos Atom?
I like that. I like that one. I like KDA as well. Like I know Danny Strauss is all over that one. One of my buddies actually bought that at like 80 cents. And like I like Polygon. Like Matic is going to be huge. Phantom. I'm very bullish. So I'm also very obviously bullish Metaverse. Like been streaming that for a while, but like I find it hard to be bullish on like Decentraland and Sandbox just because like I think they've ran so much and you've seen them pull back really strongly. However, I could be completely face palmingly wrong because you know like the amount of money that just got invested in Sandbox and like it's pretty belligerent by VCs. So they said it's worth that. So you know it's probably worth that.
Cool. Thanks, Xander, for your question.
Oh, I just sent this to you. So if you want to like,
did you DM me or where did you send it?
Yeah, Twitter DM. Just let me tag because it shows you just a good transaction of all the chains. This is why I'm so bullish Avalanche, like you know. But I'm also still bullish like Solana, ETH, every coin I just mentioned is on here. So
yep, I just
it's
shared
all
the
transaction based.
You can see it pinned. I see we're getting a few requests. I'm having technical issues. I don't know if it's Twitter. It's not letting me allow you to speak. So Craig Irie, if you can't see my accepting button to get you to speak, just DM me your question. I'm happy to look into it. But I think, next was No Vice, and then Greg will get to you right after that. So No Vice, if you want to go ahead.
Yep. Hey, thanks for taking my question. So, so there is this narrative which says that with easy money going away, risky assets starting to fall, and we see similar action in crypto. If it is a hedge against inflation, why is it not acting the other way? I wanted to get your thoughts on that.
Wait, so could you repeat the question a little bit?
Just phrase that a little better.
Okay, so if crypto is kind of a hedge against inflation, with Fed trying to stop the supply of money, shouldn't crypto be going up instead of down?
Based on that logic, it should be going down, right? Because if it's a hedge for inflation, it's been super inflation, and now the Fed's contracting, it would be bad, and that's why crypto has dropped. But however, it has not dropped as a lot, and so that's decoupling from the narrative of it being a hedge to inflation. But also, like gold is supposed to be a hedge for inflation, and gold is up 1% in the last month. It's like pretty hard to kind of compare everything to inflation. Like, I think that, and people might be mind blown that I say this, but like. I think the dollar is irrelevant. Like, I think that you're going to stop. It's like 10 years now, 20 years from now, you're going to be like, what is this US dollar? And so, and I know people probably think that's crazy, but you're seeing money continue to flow into assets that have like algorithmic, you know, ways to mint and burn coins and control supply and demand versus like Powell wakes up one morning and, you know, he eats Cheerios or he eats Cocoa Puffs and one day he burns and one day he mints more dollars. So like, you got to think, you know, that the dollar is losing strength for the last year and a half just because of all this pumping. But then, you know, he's trying to walk it back. And so crypto should be just completely dying. And, you know, as much as narratives matter, nothing matters more than price. Nothing. Fundamentals are useless. Everything crap. Price is the only thing that matters. So if you see cryptos like Bitcoin's at 50K, I'm even more bullish on crypto now than I was before, even with tapering and all this stuff coming, just knowing that if this was like an actual fear, Bitcoin would be 30K right now.
Cool. Hopefully that answers your question, No Vice. I'm just going to remove speakers when we're done with questions because we're maxing out on who can, I guess, the panel. So that's the only reason I have to remove some people. So Craig, if you want to go next.
Cool. Thanks, guys. I joined late, so I may have missed this. I've got a couple comments, and then I want to get your thoughts. So I've been following Peru pretty closely, and the guy, I mean, he gets a ton of shit, but he's totally nailed it. And so one
True.
thing that I'm questioning and thinking about is there's record liquidity on the sidelines. there's record inflows. I read these emails every week from Goldman, and there's just like so much money coming into the market, at least up until like the last Fed announcement. Hedge funds have underperformed this year. They're like basically flat, on the year, even though the indexes are up 20 to 25%. And I see like 5 stocks holding up the market. You've got Google, Apple, Amazon, and Nvidia, and those haven't cracked. Nvidia was down maybe like 3 to 5% on Friday. But for the most part, those things are near all-time highs, while growth stocks are already down like 50 to 80%. And so, what I'm thinking a lot about is if we get those 5 stocks to actually crack, what happens to all the shit that's already down 50 to 80%?
Oh man, and so yeah, okay.
And so,
Yeah,
and then,
we've been covering that like the first half of the space, but yeah,
No,
Tony, we can
gotcha.
put it
no,
I'm just
yeah,
curious,
no, we'll do it
like,
again. We'll do it again because
it's
I
a
know a
good
lot of
question
people keep
because
asking.
I thought it wasn't going to happen again. Like I thought that as these names came, like sure the growth would come down a little bit, but they would start rotating back in. No, man. Like if Google and everyone else crashes, everything will die.
And usually Google, Amazon, Microsoft, Apple are the last ones to correct in these type of cycles, because what you're seeing now is the growth stocks that have fell 30 to 50%. You're seeing that rotation into big tech essentially, right? Because Apple was ripping last week until they announced that they were having lower demand for iPhone 13. They hit all-time highs, 170. So, and I think Amazon at one point hit 3,600 plus again in the past couple of weeks. So, to your question, Greg, I think. Hold on. Who's just said hello? Can you guys just wait? If you're not asking a question, we'll get to your questions. Just want to answer in a flow. But yeah, to answer that question, Greg, I think what you're seeing is the re-rating of multiples, right? So first, what's going to happen is these multiples need to contract. Then, if bigger names start dropping, you're going to see these companies that don't have that free cash flow and are projecting, I don't know, 5-10 years. They're going to need to have. We're going to be looking at 3-year numbers, right? The duration of where we judge these companies is going to contract, come closer, and they're going to be judged harder. And I mean, they could contract more, but they can dip a lot harder, right? I mean, look at the businesses that have fell the most, right? DocU dipped like 40%, I think, on print. I mean, look at Peloton. Look at these are, they were not generating the best cash flow. Their revenue models were very futuristic.
Those were pump and dumps.
Exactly. So
those were pump and dumps by the massive institutions.
Exactly. So and they're dumped for a reason, right, Tony? Because I think you're coming to a stock selectors market, and it's going to get harder and harder. I mean, I don't know how many people on Twitter were really investing in December 2018, right? Because everyone's comparing it to 2018. But if you weren't in the market, Apple fell like 30% that month. So you're right, Greg. There could be a lot more bleeding because we're not seeing it because the indexes are at all-time highs.
Yes, so definitely a re-rating last week, and I think what's going to happen next is like Cloudflare, Snow, all of those are going to continue to re-rate. So those are going to get smashed. But I guess my plan is maybe like if we do see what happens in December 2018 and the indexes go down 20%, I'm going to go ham into like QQQ and TQQ. That's kind of my thought. If we actually get like Apple, like the generals, as Peru calls them, like if those go down 20%, then I'm going to go ham into those indexes. But right now I'm like really defensive, buying materials, financials, and energy. So appreciate your guys' thoughts.
Mark, yeah. Luke or Katie, anything to add? I know you guys are part of our team speaking here, but we have so many questions coming in, so I just want to make sure you guys chime in.
Yeah, I just add that a lot of people are making those comparisons to 2018, and I'm trying to find the tweet. But if I can recall, I went back to that correction. I charted basically peak to trough and what the percent move was over what period of time. And in 2018, if you specifically, I did the major indexes, and then I went into say like growth. So I went into QQQ, and the move was over the course of 85 days in the year end, and it was roughly a 24% move, peak to trough to the downside. And I went and compared that to now, and we've only experienced specifically on QQQ, it's only been a few weeks, and we're down roughly 7.5%, just shy of that. It's like 7.25% on QQQ. So I think if you're comparing them, and you think you're going to get a similar move to 2018, we're not close. We're not close to the end of this. If your basis is that we're going to get almost an identical move to 18 or a similar,
you're not close at all because, like you said, not only the drawdown is different, the stops are completely different. I mean, Twilio was trading at a different level in 2018 than it is now. The businesses have changed, technology has pulled forward, and I think I've been saying this the entire space. That's why I literally spent hours writing yesterday. So you have the crypto and 2018 comparison pinned above. Luca, if you want to share your tweet where you calculated that, I'll pin it above as well because I think you tweeted as well. So just DM me, or if you're not to pin it, just pin it. But if you want to DM me, I can pin it. But K, special K, if you want to go, and then I see Hato J. You can go next, but Kay, go ahead.
Sure. Hi. Thanks so much. So my question was just more about like long-term portfolios, like retirement accounts. Like I'm just trying to figure out how to like hedge those. Like a lot of people in my trading account, I'm cash and I'm just trading day to day. But like long-term accounts, I'm not sure like how I would hedge that or just go to cash. Like 'cause I'm just not. I mean, so like I'm managing my parents' money, so it's a significant amount of money. So even like a couple of percent drawdown is a lot of money. But I'm unclear, just like as I've been looking, I've been taking risk off of like small caps and stuff like that, financials, and I'm still in like tech right now. But I'm just not sure like how one would hedge like a long term portfolio. And I'm not looking for like investment advice, just what your thoughts are, like how people could hedge at this point.
So I'll answer
What?
that before Tony gets in, because Tony probably
Yeah.
protects this. He's a trader and he manages the funds. He has a lot more capital to protect. But from a retail perspective, someone like me that is very long term minded and is not trying to trade options often. One thing I do use to hedge is sell covered calls, right? So I don't know if you know how to sell those, but a lot of people, me included, don't want to lose a position at a certain price point, and you want to hold on, and you don't want to get rid of something, right? You just want to hedge to a certain extent without having to buy protective puts, because going naked short and trying to buy long dated puts, it gets a little more complex, and Tony can get into that, and there's spreads and there's a lot of things you can do. But I think covered calls is probably the easiest thing to learn and the quickest thing you can do to protect certain, I guess, from a hedging perspective, keeping your position as well as trying to gain some capital on that position at the same time, right? So for example, Lucid ran up a lot with Rivian in the past month. That's a position I want to keep, but you're seeing the stock go up 20-30%. You're getting that implied volatility in options. You can sell long dated options or calls, covered calls specifically, not just calls without owning the position, and you're going to collect that premium, and now you're naturally hedging the position. So that's one technique I use, especially when the markets are running up. That's a great way to protect your position and lower your cost basis. And it's a really simple option chain to learn, because some of these are a lot more complex. And I'll let Tony and even KT answer that, because I know these guys are trading at larger volumes of capital, moving a lot more capital.
Great, thanks.
There's definitely, I love that, Rahul. Like, I think cover calls are a great play. I would say a caveat to it, though, is while premiums are super, super, super high right now because the VIX is 32 or whatever it's at, I don't forget where it closed, but I think that cover calls close to the money are on stuff you're down on is possibly like a nail in the coffin, because like let's say look, you take SC for example, close at like 253 or whatever, and you sell a 260 call, right? And like let's say you have a 300 cost basis and SC pumps to 300 next week, because it very well could. It really could run 20% in a week, and it'd be like, there's no way. Like once again, fundamentals. Like I would really just take fundamentals and burn every book and everything that I know about it right now, because they're completely irrelevant. And you just know that like if something like a growth, like if Powell,
if he
one of the
flips,
Fed guys, walks it back even 1%, Roku's back at 300 and SC's at 350, and like stuff will come back so much quicker.
Yeah, no, I agree. With the calls, I like doing is very out the money, because I don't want it anywhere near my cost basis. And if it's in near my cost basis, the way I'm looking at it is, hey, I want to get rid of this, and let me just collect this premium until I can get rid of it. But it's usually, if the stock's at 50, I'm going to try to look at the 70s and 80s, because if that happens, if that move happens, I just secured a huge, I guess, gain that probably shouldn't happen in that short time. And if it didn't, you collect the premium. But if it did, you don't really feel that much pain, because at least you're trying to play a little bit conservative, right? Because you don't want to lose a position, but at the same time, if something runs from 50 to 80 in a month, I mean, that's a great gain. So but go ahead, Tony.
Yeah, I would say look at like in the interest of call spreads. Like I sell call spreads, and which is like I sell a cover call. I also buy a higher strike, a little bit higher. And instead of making like, let's say I can sell it for $2, I'll make like 150. However, if the stock runs 20%, I'll lose a little bit. Like let's say I sold at 265 and I bought at 275. Okay, so I'll get like $2 to $3 in premium. If the stock runs to 300 from 250, then I miss out on the gains between 265 and 275 minus the premium I sold. But I can still get that 275 to 300 versus just sitting there watching my short call that was like $3 go to 30. So that's something to consider there. But I will say premiums are egregious right now. So like it's a premium seller's market. But also understand that like this is just like the crash last year, or it's just like it. It's like up and down, like markets up 100 handles, down 100 handles, up 100 handles, down 100 handles, complete random distribution and like manipulation, overnight pajama traders kind of situation. So I would say like honestly, long term best thing is like I would probably raise cash in the things that I am up the most on. and I would not add to my losers at all. I would just wait. Like I think that, like, you know, a lot of time people are like, what moves do I make? Not making a move
Mhm.
is also a move. And just because, like, you know, we're talking about this now, but like we were talking about this a week ago and 4 weeks ago, and like everything, like it's slowly, then all of a sudden. And so, like, do I think that we could probably have like a super huge crash? Yes and no. Like, the hard part is all the money is flown into these like names that make up the Nasdaq. The S&P and the Nasdaq are the biggest pair
Mhm.
trades ever. Like, the big guys who have billions of dollars, they'll be long Google, short Facebook, or long Amazon, short Apple. What, you know, some derivation of that. And so all the liquidity and money is in those names. And so if those names are the ones holding up the market, the Ponzi has sustained itself long enough. Like, until you get a Google down 20%, which it's like hard for me to even imagine it these days. You know, like
Yo, bro.
the Nasdaq used to not be like this.
Can you imagine that 20% on Google? That would be insane. But Special K, does that answer your question to a certain extent? I know we covered a lot there. And KT, if you want to add anything, you
I
can.
think so. Yeah. Like, I'm just, yeah. Like, as you were saying, like, the market moves so fast. I don't want to just go to cash, because then I can miss that one big move when we, like, Powell just said one thing, like, oh, I was kidding. You know, we're not gonna taper faster, and then the market skyrockets.
Yeah, what I would say is December 14th to 15th is a 2-day
Yep.
FOMC. So if you're managing your portfolio, you're looking at the market, it seems like you're watching things a lot more proactively, which is great. Look for that. I think
Yeah.
that's the next event. I think that's the next biggest thing. And yeah, look, we're going to be here. We're on Spaces all the time. Tony's on Pounding the Table podcast. Luca and KT are putting out charts and everything. So we're happy to keep
Yeah, great.
this conversation going. This is a great question, and I'm happy you asked,
Yep.
because I think managing your risk and your capital is the biggest thing, right? We want everyone to secure the money that they're putting in and also learn how to manage that. So this is a good
Great.
question. Thanks for
Thank you
asking
so
that.
much. All right.
You're welcome. I think J Crypto, is that your name? J Current. Want to answer ask your question? You there? All right. NT, you're raising your hand. Go ahead.
Hey guys, thank you so much for the opportunity. I wanted to ask about Alibaba. I joined like 30 minutes ago, so I'm not sure if anyone has touched on that. Dollar cost averaged to around $130 per share, but now my view is that fundamentals are out the window now. It's a matter of it's political, and I don't want to catch a falling knife. So I just wanted to find out on your end that what are your views, short to medium term, on it? I'm thinking of just going out now.
Yeah, I'm not touching anything China related. That DD delisting that happened recently, I think that was a nail in the coffin. I haven't been anything China in exposed to China in quite some time. I was in Alibaba for a while for my dad previously, but we liquidated that position a few months ago. I think once the Jack Ma news came, you've seen that stock tank, and then I think with China, the problem is it's nothing against the Chinese markets, because the markets, definitely have some great opportunity there. But the problem is you have the government and you have politics and leaders that can flip the switch at any given moment, right? So it's not the same type of protection you have when you're allocating towards U.S. dated equity. So, it's a very simple answer, right? I think I stay away from that market. I don't think there's any reason to take that chance when you have the amount of opportunity within other growth stocks, right? And it doesn't have to just be in US. It could be for example, SC, that's Southeast Asia. So I just think it's not worth the risk. I don't think the risk to reward there. I think that's you've seen that throughout this year get taken off the table month over month. You're seeing delisting, founders being kind of just, I don't know, ghosted or hidden, or I don't know what's happening to them, and the constant tension and the way they just the control that they're trying to put into each company. I think you saw that news with Tencent. They randomly kind of put that law on them. I think in July on their music rights and how that's going to work. So it's just constant negative chatter, and I don't think it's worth it. I don't know if I think you said you still hold a position. So obviously, I'm not telling you buy or sell that position, but in terms of allocating to that markets, it's just not something I personally prefer doing. I don't know if anyone else has anything to add to that.
I would add, I would pretty much reiterate what you said. You take a look over the past, it's been quite a few years now. China and the United States, that relationship has continued to separate. It's continued to worsen. And I think now you're starting to get to the point where it's almost as if it's a whose tech company is better and whose stock market is better, and it's kind of just this bitter attitude between the United States and China, and I don't think you really want to be exposed to that. You take a look at the chart on Alibaba, and this chart it's pretty ugly. It made a high, all the way 319 pretty much a year ago. Since then, it has just been absolutely getting smashed. And it's there's been a pattern. This China drama, it starts to fade over the course of, say, a month and a half, and everyone says, okay, it's safe to get in. And people start to buy Alibaba. And then, something happens and Alibaba gets smacked again. And then it fades for about a month and a half. And then something with China comes back up and Alibaba gets smacked again. And I agree. You look at the risk reward when it comes to this company, and unfortunately, prior to all this, yeah, it was a pretty solid company, and it was quite clear by the
It's still,
price
yeah, you can still argue it's a
But
solid company. I
yeah,
just think it's not worth the risk.
no, it's not worth it. With exposure to China, it's not worth it. I think you're just much safer going with a U.S. company, or not even a U.S.
It
company.
doesn't have
but
to be U.S. It could be any market. It's just that China proposes that risk that are just not warranted, I feel.
Go for markets. Go for markets with a good U.S. relationship. Your risk
Exactly.
will be significantly lower, in my opinion. But.
We're going to bombard with questions, Tony and Luca and Katie. I don't know how long you guys have, but I'd love to kind of keep taking these. I see we have Danny on. Danny, what's going on, brother? If you want to jump on and join, we've got so many crypto questions. It's insane.
Yo, bring Danny up
here.
Yo,
Yeah, bring Danny. Where's Danny? I saw him. Did he leave? Danny, if you're here, just come up and request to speak, and I'll add you. But all right. I think. Oh shoot, we lost some speakers. So hold on one second. Let's bring on people slowly because there's just way too many. Hold on, Danny. Let me invite him if he wants to come up. Dude, Spaces is so annoying. It only gives you 10 slots, and there's like 4 of us here, so it's like hard to manage. All right. Sorry, guys. I know we have a lot of questions. I'm just trying to go through who's, I guess, questioning first. Let me just bring up a few people. All right. All right. A few at a time. So just hold on. I see your request. I'll add you as we go. Cal Patel, if you want to speak first, ask your question.
Yeah, no, I just agree with your point of view on China, and I you probably my thing. I helped Best Buy get out of China. Several years ago, we invested in China. We went in there as a U.S. corporate. I think somebody else was on, but maybe hang on. Yeah. Okay. Yeah. So. Yeah. So I was gonna. Sorry. Echo thing going.
Hey, Cal, I think your speaker just keeps echoing. Do you mind muting or just changing your, I guess, setting? And you can stay on as a speaker. I'll keep you on, but a lot of background noise. All right, so let's go on. Danny, you're welcome to come up. I just sent you a request. But in the meantime, I think Chapur, if you want to ask your question.
I think the noise is coming from it. Needs to mute it, and then I'll finish my point. Sorry. Yeah. Hi. Yeah. So just wanted to research your point on China. I think you're running, and you, Rahul, you're absolutely right on. The challenge with China is that it feels enticing, and you kind of get into it, and then you want to leave. And just from a corporate, like an executive who took a company to China, a really good strategic intent, good execution. We even bought a company in China. Best Buy did. And then we exited all of that, right? Kind of quite helpfully, actually. It's been very good for Best Buy that they exited China at that point. But a lot of it, just from the inside doing in there, I can see the sense when people think, oh God, this is an opportunity back again. The key thing, I think, Rahul, you said, is that do not have visibility to any of the decisions that are being made, and they can happen really quickly. So the level of risk you take, you might as well take that risk in other segments where you can really assess the risk properly and actually see some of the decisions coming on a little bit earlier, because China will come at you at a real rate. There'll be some centralized decision. They're working on a 5-year plan for China, right? Not judging them, not doing anything in this particular context. But from an investment perspective, it's a tough place to be. I just wanted to reassert your view on that, and at least from an executive perspective, but also as an investor myself. And also, it's the same problem with startups there too, because you don't get the same and even if you have a local partner, that local partner would get under pressure, right? So it just doesn't. It's a really tough place, and I know there are people investing there, so I'm not saying that they're wrong or anything, because who knows? We're all humble here, but just a perspective on that based on my experience. Thanks a lot for having me on. I'll pop down in a moment. Thanks.
Yeah, no worries, man. Thanks for sharing that. And yeah, no, I mean it's just a risky allocation to make, and you're spot on. And I think that's also in your experience, kind of being allocated there and having real experience within the markets there. So yeah, let's just keep going. I see TSDR trading on. What's up, brother? I know we've been on a few spaces. If you want to come up and join the panel, more than happy to have you on. But just moving forward, Chapur, if you want to go next.
Yes, hi. I've been investing almost like 50 years as a retail investor. What I realized, because I primarily focus in the like tech sector, if you as a retail investor, if you do not take profit at all, you will doesn't investing in a big, technology is not worth it if you don't sell at all. Like what I realized that this whole stock market is kind of scam. You guys are giving so much hard time for China, but I don't see it different in the US too. Like just think about the people like who bought for example DocuSign. It almost like a 50% in the streets, it's just gone. Who are those buyers? All retailers, and they're all being fucked by Wall Street. Like you guys talk about long time investor, it doesn't make sense at all. If you want to make some money with profit,
what's the question?
What I'm trying to say is, hold this investment. Like that's my opinion.
Yeah, no, it's definitely it's a tricky market, right? I don't think any of us said to I don't think any of us are allocated to a docu, so none of us are, I think, talking about docu to invest in.
How to just make that much? Like 1 year, all the retail investors came in there. Wall Street was always, all these banks, they were always giving higher ratings. You know what I mean? They were not.
Yeah, 100%. And you see that all the time because they get. It also depends on what they get allocation to, right? You see Morgan Stanley right now with Crowd, they keep assigning it a neutral because
they're all pumpers.
They're pumpers because they got Sentinel
and
One.
your exit liquidity.
Yeah.
That's
if banks they are pumpers, they are trying to destroy all. That's why
this is not an if. This is not an if.
This is why retail doesn't understand that GME squeeze that they put on was mathematically amazing, but we can never win. It's Wall Street.
Wait. And the GME squeeze the first time was retail, and every other time was hedge funds.
And Tony, also people don't understand is you need Wall Street, you need market makers, you need hedge funds because they control liquidity and they move. That you wouldn't be able to fill your position if you don't have a market maker. It's simple as that.
The market's a pond. You're a big fish, you're a small fish, or you're a frog getting eaten by all the fish.
Okay, so the assumption is a fraud in a way. It's true then, right? You have to be careful what you get in.
No, it's the game we play. If you look at the fact that Goldman Sachs flooded Tesla all these years because they're pissed off at Morgan Stanley because Morgan Stanley took them on IPO and got bigger allocation. This is a game, and people want to romanticize and just give this lovely view to investing. I
absolutely agree what you said. This beautification of investing is all I don't really like it. Yeah, I agree.
It's not simple. Yep.
It makes people feel better about themselves when they make a wrong decision because saying I'm a long-term investor is the fattest cop-out of all time.
Yeah,
in my
absolutely.
opinion.
As a retail investor, because that's why I have an investment in some I allow bank to manage this, whatever. But I've been playing. If I don't make profit at 3 years, I'll be in negative. So anyway, thank you guys. I'm not frustrated. It's kind of like so. I know every country is the same. I don't see any difference between what China doing, what Wall Street does. For me,
no. There is a difference. At least we know the wrongness going on in the U.S. In China, we don't know the extent.
We don't have as much, I guess, lens into that market.
Do you think we have all the what's happening in Wall Street? If that's the case, there would be no Enron.
All right, I got one question. Where's Jack Ma?
I'm not. I don't know. Why are you asking me?
Well, that's what I'm saying.
But that's the thing. That's the point, right? You can have a top
that's
tech
how belligerent
CEO.
it is.
Do you imagine? Can you imagine Jeff Bezos goes missing in America? That would be insane. I can't even
and no
think
one's
of something
freaking out about
happening.
it.
Yeah.
Everyone's like, oh, he's just probably on vacation or something. No, it's a very different market, and it's because one's a real market and one's whatever they say that it is over there here.
But again, I want to get away from this China-U.S. market. That's not the point of this. So let's just keep moving. Soup Lord, if you want to ask your question. Soup Lord, can you hear us?
Can you hear me?
Yeah, it's cutting off a little bit, but go ahead.
Yeah. I think I'm okay now. So first off, hey guys.
Hello.
What's going on?
A lot of information. I'm probably the newest guy in the room here. Even in terms of investing, I'm learning a lot of new terms. Thank you guys. I'm a little bit mad because I really did believe in Neo. I still do. Part of me does. But yeah, since we're moving away from that, I wanted to ask more about, have you guys heard of the coin called Jasmine? And what do you guys think of it in terms of the presence that it has in Japan, and obviously how it's being, pushed and rallied as, the Japanese coin, and we all know the
I've actually heard nothing about it, and I spend all my nights doing stock and crypto.
That is crazy.
Yeah, and I would also say just like,
yeah,
I mean, like investing in Japan when they're like there's negative rates forever. I mean, I don't know, it's a shit market. I would say just like focus on U.S. market. Completely honest.
Yeah. So even in terms of like crypto, because this is more crypto than it's crypto.
Yeah, just look at the places that have the most money. Whatever countries and people have the most money, that's where all the money will continue to flow. The rich get richer, the countries that are rich gets richer, and so like you're not going to have some coin that changes about Japan and makes Japan like a superpower again. It's just not gonna happen and not gonna make it. Like I think that in order to be successful in a new paradigm shift, you have to be successful in the previous one. And Japan has fumbled the bag for 30 years, and so like I would not invest in anything in Japan in my entire life.
True. You okay?
I'm sorry. It's hard for me to be bullish on anything in Japan when they're like perpetually negative rates and like worry and like their market hasn't gone up in 25 years. It's like it's really like hard for me to even give it a say.
Hopefully that answers your question, Soup Lord.
It did. Thank you.
Sorry, couldn't get more detail than that. But thanks for joining.
Thanks,
And Humble Beast.
Much love to you, Soup Lord.
If you want to go next.
Much love, man. You guys are great. Let me switch to listener.
And until we get Humble to ask this question, I've shared the tweet that Luke was referring to earlier about the 2018 drawdown. It's pinned above. You can see all the tweets we've talked about through this space. You have the 2018 chart that Luke looked into. Tony wanted to share something about crypto, and I have that pinned. And then you also have a thread that I wrote comparing the markets to 2018, where it's now. So everything's pinned. But Humble Beast, go ahead.
Yeah, what's up, guys? I just want to say thank you for all you guys doing this. You're really giving a lot of the new guys a lot of information that we need, and I really appreciate all your opinions and all that you guys do. But it's kind of a two-part question. I'm bullish on crypto. I'm bullish on Bitcoin. I'm bullish on Ethereum. I'm bullish on crypto in general, and it's more on like a view of like. Anytime I go on YouTube, I just saw a new advertisement. I don't know if it's Visa or something. They have like a crypto debt or credit card. I don't know what they're doing. And it was like you reserve your spot for your new credit card. You go on the highway and you see crypto billboards and stuff. You see what the president of El Salvador is doing. So in that sense, you kind of feel like crypto is growing. So obviously, like I don't know. Now it would just be like, all right, crypto's going up soon. But you see what's going on with SPY. I noticed that Bitcoin follows SPY a lot, and I don't know if the two are ever gonna like decouple or whatever. But SPY looks kind of bad. You know what I mean? Like you guys are saying that. You guys are saying that like Powell might kind of like backtrack on what he's saying and stuff. But I feel like my logic and like who am I? You know what I mean? But my logic is just like
don't say that. Your logic's just as good. Just finish up.
We're basically what I'm trying to say is like we're noticing all the bad things that Powell is saying, and we're saying all right. The one good thing that he can say is to bring back the market is just all right. I take back everything I said, but that's basically the only thing that he can do to bring the market back, because everything that he said 1 week that him, Yellen, and Biden were speaking was just terrible. He was just saying terrible things, and I'm like the transitory comments. They were grilling him on the money supply thing, and everything that he said was just like you can't really take any of that back.
He fumbled the bag. You're right. Yeah, he just doesn't. He's capitulatingly tilting. Like he's just. Yeah, you're right. Everything he's saying is already being pretty much backtracked. So if he backs it again, two negatives, like
it would just make no sense if SPY bounces back. You know what I mean? But it's like I also see what the president of El Salvador is doing. You know what I mean? I would assume if SPY crashes, Bitcoin crashes. So the president of El Salvador is like an idiot, tweeting he buys a dip every time and Bitcoin's like at 30. You know what I mean? It just doesn't make any sense.
No, yeah, I actually have a great answer to this because like this is probably the biggest question I get asked all the time in crypto. But I think people need to learn to understand that Bitcoin is an asset class essentially of its own. And I'm not saying that based on the technology or anything, but based on the way that it's used in institutional ways, right? Like we have Bitcoin ETFs. And so if you have a Bitcoin ETF, which we have multiple, if you have Bitcoin spot futures, you have all this stuff for Bitcoin.
That is called being institutionalized. When something's institutionalized, it becomes part of an overall portfolio strategy for whoever is investing in it, right? Like, let's say you are this, a big fund who's investing in Bitcoin. You have a drawdown in stocks. You have to sell your Bitcoin and keep your stuff at parity for whatever your percent goals are. That is the difference between Bitcoin and the other layers of crypto, is because those things are not further along enough that they have all those ETFs. Like, I saw this thing where Grayscale has like 30 to 40 new things ready to come out. And so these coins, and the Avalanche is on there, Solana's on there. As these things come out onto the market, they'll become more and more institutionalized, and they'll begin to track the markets more. Until that happens, they can run wherever the hell they want. But Bitcoin, I don't think can, because if you really think, like, let's say you have a $100 portfolio, you have half of it in Bitcoin and half of it in SPY. SPY tanks, okay, like your entire portfolio goes down in SPY, and now Bitcoin's a larger percentage of your portfolio. Let's say it's 60% versus 40 or versus 50. So you have to adjust that. You have to sell 10% of your Bitcoin and buy 10% of your SPY. And so that is the difference, in my opinion, for Bitcoin. That's why I'm not necessarily super bullish on Bitcoin, because it is super connected to the overall markets, inflation, the Fed policies, because Bitcoin is that gold standard for crypto. And if you look further deeply and you look at the other layers and stuff, and you see that this cycle that Bitcoin dropped, the flippening has gone to 54%, which is like the all-time high since 2017, which means people are buying Ethereum over Bitcoin. And that just goes further to the point that Bitcoin is completely related to the markets, where why is ETH, much closer to alt than Bitcoin? It's just for all the reasons I said previously. So you are right in terms of Bitcoin, but it does not mean that that's connected to all the other coins.
I just had one more thing to add to that, and now I'm done talking. It also has to kind of what we're talking about right now. You know that Elon, I know that the CEO of Nvidia just sold the stocks. You guys said that the CEO of Microsoft sold the stocks too recently.
Yep,
That
Nadella sold half a stake.
yeah, and there's probably a lot more that I don't know about. You know what I mean? But that's not a good sign, right? So when I see that, and then I see the CEO, and I see the president of El Salvador saying, "I bought the dip on Bitcoin," I feel like it's just all backwards. You know what I mean? It just doesn't make any sense.
You have to look at El Salvador too. You have to look at El Salvador's financial situation, no bueno. And so, having an FX difference between a country like the U.S. to like El Salvador, the U.S. to Venezuela, like those things over time, like will play out further and further. And I know El Salvador is not like even slightly like Venezuela, they're pegged differently. But I'm saying that like those governments are trying to do creative and radical things to maintain their economic power and like their solvency and their dollar. So it's like El Salvador is a really specific situation, and Bitcoin is a really specific coin, if that makes sense. Like I do think that if you continue to look at the amount of nothing matters more than flows, and the only people that have real money are the ones who have those big funds like Alameda and Team Z and all those guys. Those guys have pumped more money in the last month in crypto than they've pretty much ever done before. And so we're in the dugout, we're in the parking lot slamming beers. The game hasn't even started yet for crypto. And I know people could say, well, it's a bubble, it's caused by this and that. Bubbles can get big enough that it doesn't matter. Like, there's no reason why 5 stocks make up 60% of the NASDAQ. That, my friend, is a bubble.
Wow, that was epic. Tony Top. All right, Humble. Hopefully that answered your question. Luca, I'll let you speak before we take the next question. We're just getting slammed with questions. We've been going for 2 hours. I feel so bad cutting off eventually, because I know how much this is probably helping people, but we'll try to keep going for as long as we can. But go ahead, Luca.
Yeah, I just wanted to I would say add to the conversation here. I look at the headlines every single day. Like, I dig through all the news, whether that's crypto or whether that's just market related news, typical news. And it's kind of crazy. Over the past, I would say like 3 months, the amount of institutional adoption you've seen in the crypto space has been like ridiculously significant. Like, it's like every day I can probably bring up 20 or so articles on institutional adoption. I mean, it is absolutely insane.
Exactly.
It's like, I forget, I was going through venture capital flows into the crypto space. In just this year, it was like a record amount of venture capital going into the space. So, it's crazy. Like, they are running, literally running into the
with
space
the money.
And that's the whole thing, and I wanted to bring it up earlier. My whole brand is running with the money, because I watch where the institutions are going. The big dogs control these markets regardless, and you want to follow them, because where they go, they typically profit. The big money typically profits. So the chance of making money by following them and making similar moves to what they're making increases your odds significantly. So I look at the flows and I look at the adoption by institutions in the crypto space, and I'm like, okay, I'm going to absolutely dig into this space as much as I can, because clearly the big money thinks there's big opportunity there as well.
Spot on, Luca. Thanks for sharing that. Hopefully that answers your question, Humble Beast, and thanks for joining us on Sunday. Next question, I think, is from your name is Vax, so I
Yes,
think
sir.
that's what your handle is.
Thanks for this opportunity. I have a quick question regarding the current situation with the market. For somebody who already maxed out his funds, everything's on the market. Would you consider, or would you think it's a good idea for someone to go on margin when we see a lot of
No.
stock that
Don't go on
No.
margin. Simple as that.
Simply not.
Don't do that.
Simply not.
You're gonna blow up
Yeah.
your account.
All
Like,
right.
like I'm having an infinitely hard time navigating these markets, and I know what's going on. I would never ever tell anyone to go on margin in this situation. I don't think anyone should ever go on margin. Like, I think there's many more creative ways to get leverage than going on margin. Like, I can think of 100 ways to leverage my position 20 times without having to go on margin. And so like if you're going to be as belligerent as going on margin, and this is not to you, we've all done it, and this is what I'm telling you, like, it's not, especially not in a time like this. Like, granted, in 2020, the reason I did super well last year is because I went 50% margin at 2,300, but I was in a situation where it's either make or break, and it's very different. So like, I don't think that we're quite there yet, and I will never do that move again. However, that move worked once, and I've done that move a couple times, and it's not worked, like in my previous years. I would just say margin is a really, really scary thing, because if you look at the markets now, and the fact that we're even having to have a space is considering like everyone has like 100 different viewpoints, but at the end of the conversation, everything just leads to this market is shit. This is not the time to margin. And like, I just don't think there's ever to margin, honestly. Like, there's just a better way to use your capital and get leverage. Like, there's like ETFs that you can trade with leverage. There's options. You can buy in the money leaps, which are synthetic longs. Like, there's just a lot of other ways to get risk without having to possibly owe your bank.
As Tony always says, you need to live to trade another day, and to live to trade another day, you need to preserve your capital. So I think it's just don't do it. You're not smarter than the market. I think don't try to be there. Don't play hero.
Yeah, no one.
Just,
honestly, I don't think
try to figure
anyone
out
should
what's
be on
happening.
margin. Look at Bill Wong. Like, that's why.
Insane. Yeah. Yeah. I hope that answered your question, Max. Do you have anything else?
Appreciate it. Thanks very much.
In no way is this a dig towards you or your
Yeah,
market
definitely not.
ability.
We're not
even
this,
a little bit.
Yeah, we're not
this
saying
is
this
like
to like put you down. It's just anyone, all of us.
I am not on margin.
Yeah, no one's on margin. It's just not recommended because
but
you don't
bro,
want
you
your
know what's
broker
crazy?
account.
Leverage is like at highs, bro. Leverage.
Yeah, it's insane. That's why I
retail
said
call
no.
buying 30% of all the call buying.
The minute he asked the question, I said no, and I sounded a little rude, but not to be rude. I was literally saying no, like just don't. I'm trying to help. Like I really don't. Like the last thing I'd want to see is like lose the money that they shouldn't be losing. Right? Just don't do it. Like just don't try to play smart.
Yeah.
Let's figure out what's happening in the market. That's the question we've been getting for the past 2 hours, right? Like what's going on? What's going on?
Bro, I also
None of us know perfectly, but we're trying to make sense of everything that's happening.
100%. I got it. Like, I think there's one thing I just want to like touch on, and I think that there's so many people who are right now uncertain. I'm uncertain, and I'm very like rarely I don't know what's going to happen, because there's so many, like, this is one of the craziest things I learned in econ when I was in high school. I learned econ 101 in high school, like the first class I ever took, was that supply and demand, and like those graphs that you see people they're not always either like increase in price or like they can be ambiguous. There's many situations where an increase in rates and a decrease in supply, like, these things lead to ambiguous situations. Then you factor in untangibles, which are COVID, which are those things going on. It is incredibly ambiguous, and though uncertainty and margin are the worst combination.
Appreciate it. Thanks very much.
Thanks for joining, Vax. It's transitory. I think the term's retired, but go ahead.
Yeah. Hi, guys. Yeah, so I've been listening about you guys trying to compare this to 2018 in terms of, this whole Powell comments about, faster tapering. But is it really comparable? Because, we knew tapering was coming, and
it's not. Yeah.
And it just 2 months early, like, hasn't the market only priced with the 5% drawdown? And it seems like everybody's too bearish. VIX 34, 35, usually it's a crisis. And I think the put call ratio went above 1, which is usually and the fear greed index. So it feels like, the earnings are great. And, Omicron, I've been hearing, even though it's in 40 countries, it's very mild, even though it's transmitting a little bit faster, but it's nowhere as compared to Delta. So just looking at Powell's thing, like, I feel like market's making too much of his slightly faster taper, because 2018 he was actually hiking rates. I mean, now he's still providing liquidity, and so he was actually selling assets in 2018. And no, Fed has not indicated that they will actually, they will keep the balance sheet at this level. They'll just taper it, and then they'll just watch. That just gives them more option
Yeah,
to
2018 was a response of unwinding that was happening since 2013, and the market was a completely different narrative. Like I've said this like probably 10 times on the space, and I hate repeating myself, but you were dealing with Brexit, international trade uncertainty, and
It was China.
it was China, and you had these rates. We rose rates 4 times in 2018.
Right,
So
right.
that you saw that blast off or that final
And
kind of
tariffs.
paper
Still, I've been
takeoff
hearing
in
people
December
fearing like
because
prices will be crashing more and
everyone's
all.
comparing it to 2018. Like, look, I have this thread pinned above. I really encourage you to read it because I literally agree with you. It's not the same. It's two different times. It's just what happens is human psychology. We like using reference points because that tries to give us an indication on what's going to happen next. And I think I'm telling you, the reason everyone's complaining to 2018 is because they want to feel good that, oh, you're dropping now and you're going to rip in 2019 like you did after. No one knows what's going to happen. I have no idea. Tony has no idea. Luca has no idea. None of us have any idea. But what I can tell you is this is one of the trickiest markets, one of the hardest markets to be in because you've seen a massive run up. You've seen a Fed that's more accommodating than ever, and you're seeing record levels of participation. At the same time, the best capital allocators in the world are selling. Like VCs are retiring. Literally, yesterday on the All In Pod, they were saying how there's venture capitalists that have some of the best returns from 2010 to 2020, and they're just like, do we want to spend time figuring out what's going to happen next in the next decade? No, but you're also seeing massive technological change. So no idea what's going to happen, and I think
But
this entire
if you
space
look
has
at
been dedicated to
market,
that,
right?
and like I don't think we've answered it clearly. But Tony, like it's just I get the question. It's just so hard to figure
No,
out.
but I think history doesn't repeat, but it does rhyme. I mean, I think you can say, okay, 2018, 4 tapers, but like the market, we didn't have COVID to come out of, and we weren't already inflating like that. So you can call that a wash. You have China versus COVID. You call that a wash. It's pretty much like, and it's not the same. Nothing's ever the same, but it's pretty
Yeah,
close.
it's two
I mean,
different
like,
types of events.
and like,
But
and to your point about, to his point about the word like transitory and Omicron, it doesn't matter. Like I said this, like people laughed and people gave me a bunch of crap, which is fine. I'm used to it. But like I said that we're going to go down the entire Greek alphabet this year. We are at O now, so we're not done. And every time it's a ticket to use as a headline to draw a narrative, regardless of if it's a stronger. The only way that it will actually produce a lasting, meaningful change in narrative is if that, like you, and I'm sure you know the chart of like the disease, the spreadability, and the strength of it to kill people. Like if we get something in the middle to upper right quartile, yes, that'll be super bad, and like you'll get a very big difference. But like besides that, every headline is the same, and they're like the difference here is like usually those COVID headlines they rip the stocks that are going down now. But instead, because that it's causing liquidity, which overtakes like narratives and like which stocks are running. So
just
when you lose liquidity, it doesn't matter if it's a COVID stock that's going to benefit from COVID. SE should have gone up because of Omicron. SE went down because of liquidity in China. Like
sorry,
Twilio should go up because of
sorry, I'm not familiar with SC. What's the stock SC?
it's a
C
company, C
Limited, right?
Limited. It's a
Yeah, I'm
big
just
growth
saying
stock.
like these companies that should be going up, they should be going up because of COVID, because they went up because
Yeah,
COVID
yeah,
in the
last
past, and
six
now
days
they're
were
going down.
weird. Last 6 days were weird. I know everything was selling. But just to look at some green shoot, right? If you take out those 6, 7 big tech stocks, right? Average Nasdaq 100 stock is down 15 to 18% from its high. And we're
Yeah, I
talking
think
Nasdaq.
Luca just put a thread on that too. I pinned it. But yeah, go ahead.
So there's something like we are already average stock is already down so much that how much more lower we're gonna go. Let's see. You can always.
I think the biggest thing is Tony. Like, and I think correct me if I'm wrong. I don't even look at these 30-50% drawdowns as the stocks are down 30-50%. I'm looking at it as they're down because they run up too hard, and they run up because multiples didn't have a ceiling, because you had a Fed that was saying it's 0%, right? The cost, it's simple as this: the cost of capital goes up, multiples come down. That's literally what it is. So it could go down more. Like I don't want people to think in the space that 30-50%. Oh my God, like this is it. Like this is it's not. Like no one knows what's it because these things ran way too hard. That's where you're seeing the moves like Upstart and DocuSign and Peloton and Zoom and all
Docu
these
should have
things.
never been where it was. Docu,
Exactly.
there's zero merit to Docu, and I never understood Docu. I've never ever pounded the table on Docu. I've only traded it, but like Docu, the entire time, in my opinion, was stupid. But if you look at Apple, if you look at Amazon, if you look at Facebook, if you look at Google, obviously world-renowned companies, infinite cash flow, infinite like moats because there's size. Like once you have a size, you don't need a moat. You have a size. So like they're still trading at like 27, 30 PE. Like that. That's egregious, no? Like
Yeah,
that's
it
like,
is. You know,
but like, but if you look at other companies like C Limited, like you give C Limited a year or two, the growth like basically if you put everything into an Excel sheet like the way you're supposed to do it in like a college class, because I did it and it was all dumb. There's those growth names that are killed now that are long-term prospect good companies that are still up, and it's very very hard because it's frustrating to investors. And like obviously SE now is at the average price of sales it's been forever, and like
It was
the only reason I'm
actually, it's
saying price,
it's pre-COVID, Tony. I think the sales, that's how much it's dropped
it's a
recently.
joke.
It's a
Well,
joke,
and
yeah.
here's the thing too. You look at Amazon. You look at like how many years it took for Amazon to get profitable. Once Amazon went profitable, then everybody bought it all day long. The second SE is consistently profitable. The second Mercado Libre is consistently profitable, but it's getting killed because of currency. Like dude, it's nothing is going
It's
going right
insane.
now, which means the only way to even this out is a flush. I don't think there's any other out. And I said this 3 weeks ago. We got a flush, but we need a flush in the big names because the only way that you can put money in something else is by taking money out of something. And I know that people have money on the sidelines, but that doesn't necessarily mean that they're going to put it in until markets are certain. And I don't even think the big players are going to be back till January 3rd, because why would you do it now when all this uncertainty and you can wait till the December meeting and just go on vacation for the next month?
Okay, so you're saying that we won't have clarity till Fed meeting at least, right? At least wait for
Middle of
Jan
December.
3rd.
Yep. Okay.
Well, Jan 3rd, yeah, I think that's the 30-day rule that Tony's talking about. But I think the next Fed, like you mentioned, transitory. Yep, I think it's 14th and 15th December.
Okay.
But go ahead, Luca. Do you have anything to add there, or KT?
No, I'm just long-term investor. I just feel like it's no point getting bearish. Like nothing fundamentally has changed in terms of, if you're just a long-term holder without margin, there's no point selling at this point, right?
I can't
I'm
say
not.
sell, but
Yeah.
I'm long-term invested, and I'm pretty invested. I mean, I've taken stuff off the table that when I say taking stuff off the table, I've sold stuff that I knew was going to get impacted by this, but I'm still holding stuff, and I'm down on stuff. I'm down on Twilio. I'm down on some stocks, and I'm up on some stocks, right? I own Microsoft, I own SC, I own NVIDIA, so it just really depends. I can't tell you when to sell,
Yeah,
so I
the
didn't want to
biggest
say that.
problem for the market this year is that the market did so well for everyone last year. That's
right.
In essence, that's what it is. And so everything that happened last year
Just
that went
averaging
well,
out everything.
that's your risk for
Yeah,
this year.
just depends on your long-term horizon. What's your risk management techniques? How much you can afford to keep in, and yeah, just wait. I think none of us have the crystal ball here. What's going to happen? I think
You could also
the
just
one thing
put
I will
everything in the
say.
UST protocol. Sorry, go ahead, Rahul.
Yeah, no, go ahead, Tony.
I was just going to say, like, because of all this uncertainty, and that's why I've tweeted this yesterday, I might just throw every personal dollar I have into UST protocol, make 25%.
Do you want to explain how to do that, Tony? I think you answered that.
What is that?
Earlier.
Is it a crypto thing?
Yeah, I mean, like, I think all this uncertainty just makes me more sure that we're moving towards like people putting money in stability and not in the dollar, because there's no stability in that, because the Fed loses credibility every day. So basically the ecosystem that Terra and Luna, it's Luna coin, but Luna powers UST, which is US like Terra, it's not Tether. It's a different ecosystem. But if you consider like all the savings loans payments that are around the world, I was reading something like if they even get 1/20th of all of it, it's about an 8 trillion valuation. And that's why I'm super bullish on Luna, is because as people buy the stable coins, since it's based on the Luna network, you have to burn Luna. And there was a protocol change that happened last week. And the reason I wasn't pounding the table is because the protocol change, right? I always say this, news changes, I change. My mind changes every day, as it should. So instead of having to, like, you deposit Luna, instead of having to go in the pool where there's still an existing amount of Luna, to create the US tether, which is just, you mint the stable coin by burning Luna. Instead, it burns it now. We used to put it in the pool, which means that the supply existed, but now you burn it. And so it's creating a deflationary mechanism as you're creating a new stable coin. So as people are bearish on everything, people will search for yields. You can't get yield in a savings account. You can't get yield in a CD, or you can't get yield in a bond, but you'll be able to get yield in other places that are trying to change the way that, like, why can't we get yield in a bond right now? Like, why can't we get yield? Why are bonds so
Which
horrible?
broker allows you to do this? Like which exchange?
It's called Luna. LUNA is the ticker symbol for the coin, and then US Tether, or US Terra, UST is the stable coin that backs it. So,
I know.
and if you stake UST, you're getting 25% APR a year, which is.
But that's what I'm asking. Through which exchange? Through which provider? Is it? It's not Coinbase, right?
Where do you do it, Tony?
I'll do a thread because it's like a little lengthy. But,
Tony, just put a thread on that after. I think a few people have asked that, but just to keep things moving. Thanks for
people keep asking on my DMs.
Yeah, thanks for jumping on transitory. I think Luca, if you want to jump in, and then Adam, we'll take your question next, and hopefully we'll wrap up soon.
Yeah, I mean, I would just mention that a lot of people from the line of questions, they're trying to figure out, what are the markets going to do in a month? What are the markets going to do in 2 months? And how to, basically position yourself for that. I think probably the I would say a conservative way to handle that, instead of attempting to predict what's going to happen in 1-2 months, which is extremely difficult, pretty much, I would say, darn near impossible. No one has a crystal ball. What I do is, you simply just de-risk and you keep your risk lower. So, for instance, what I did was say, on 11/22, I trimmed my position significantly. I trimmed my position significantly because, you take a look at QQQ, and the technical candle you got there was not the best, and the water started to get murky there. Just, on a macro basis, you started to get, these headlines. It was the Fed, whether it was, you still had COVID as an issue. The outlook, you could say, the vision, it got blurry. So at that point, you simply say, okay, I'm not sure what the market's going to do for the next, 6 months. I'm simply going to de-risk and I'm going to wait until the water's clear again. And I think that's probably the safest way to handle these markets. You don't need to be risk on all the time. You don't need to attempt to catch these falling knives. Just wait until the market tells
Just wait
you.
till momentum comes back.
Yes, just wait till momentum comes back and the market tells you it's safe to jump back in. Until then, don't try to catch this market to the downside, because if you try to catch it and you enter and then you get another 20-30% move to the downside, it's not going to be pretty. So I would simply advise people to just sit back and observe, because if you just simply sit back and observe and keep your cash on the sidelines and wait until the market and the momentum comes back, you're going to be able to navigate these markets, I would say, a lot more efficiently than those who are trying to catch these bottoms. That's my advice. That's what I'm doing. And also, what kind of led me to that decision was you were seeing some unnatural moves in this market, and you still do. But over the past 12 months, specifically the last 3 months, I look at some of these moves and they're insane. Like, I just brought up the NVIDIA chart, and yeah, NVIDIA is a phenomenal company and it has a ton going for it. But this name on 10/4 moved from sub 200 to 346 within a month and a half. I mean, that
Gamma
move
squeeze.
is massive. I mean, that's an insane move. That's not like just a natural move. That's a sizable move. So I entered NVIDIA in September. I was going to risk off NVIDIA, early, a month later, because the gains were already sizable. You have to look at this market, and in my opinion, you got to be very quick. I mean, if you're sitting on sizable gains, trim it. And especially if the waters start to get murky, as they have the past few months, then yeah, trim it, de-risk, because you're sitting on large unrealized gains, and the outlook on the market in general, it isn't as clear as what it was, say, just a few months ago. But that's simply the way I operate. That's the way I look at the markets. I'm not the most risk-on trader. I'm actually pretty conservative. But that's simply what I advise people to do. Just sit back, and you don't have to be full risk on in this situation.
Yeah, no, spot on. Adam, if you want to answer your question.
Yeah. I was just wondering if you guys had seen Keith Rabois' market top call. And
Yep, I literally I mentioned that earlier in the space, but yeah, go ahead.
Well, if you already said it, then I can just maybe like review the notes later on. But I was just curious because I've got it pulled up, and this was in the middle of
No, go ahead. It was very brief. Go ahead.
His saying that in the middle of November that he's anticipating multiples going from 40 times down to 20 times, and that he's like hearkening the what's it called, the internet bubble, in the late 90s. I mean, he's not like panicking or something, but he's like he's like, this is unrelated to COVID. And I just found it interesting. And, I was wondering if you guys had like vetted it and had an opinion on his point of view or not.
So I looked at it very briefly, and I think he was also mentioning how how VCs are that a lot of these tech VCs that we've seen generate these massive returns in the past decade has been mostly software oriented, right? And those are still the stocks that many people on FinTwit
IPOs.
Yeah, and they FinTwit usually likes these stocks, right? That's the stocks we've all been talking about. So he's definitely not wrong. I mean, a lot of smart people have been saying this for, I think, over a month. I mean, Tony's been telling me this till August. Like, I'm not gonna just boost Tony up. And I called him crazy. He texted me, I think it was August 11th, literally like, yo, I think he has a tweet. Tony literally tweeted, I'm selling my stocks for JPEGs, and we all called him crazy. But it's the same concept that Keith or Chamath or Nadella or Elon have hit on. Is the problem is that the multiples you're paying, like for net, You're paying 70 times sales. I own Net. I like Cloudflare. I've been long since 70. I have a huge position. I don't know how to get out of it, but I don't know if it's worth 70 times sales. So this is the problem with the markets and some of the stuff that Keith is saying. Yeah, no one is like super risk off in these those type of, I guess, positions that those guys are in because they want to stay investor. They're capital allocators. That's what they do. But at
You
the
nailed
same
that,
time,
Rahul. I just want to jump in for a second and
yeah, go
say
ahead.
that everybody is off. Like 90% plus of people are offsides, like you said, and that's very true. Very, very true.
Yeah, and the thing is, the problem is, I think what everyone is trying to say, that the smartest people, is that these multiples deserve to get a re-rating, and that's what you're seeing. You're seeing growth stocks literally go through that contraction in front of our eyes, and is the pain going to continue? Probably. When is it going to stop? No idea. But we have to watch what's going to happen with the Fed, and also reassess what you're willing to pay when rates are 2 to 3%. Right? If you can guarantee yourself yield of 2 to 3%, is it worth that risk of losing the gains that you could have made in the market? It's a lot more risk in the market than it is off the market, right? And you also have crypto, as Tony's mentioned. You have Luna or UST or these other coins that can garner, you can stake your, I guess, crypto assets and make, I think, an average, I think, like 6-7% minimum even on Ethereum. So um yeah, I think we're just kind of speaking generally there, but Adam, feel free to jump back in, or what your thoughts were from reading that. But I think that's what I took away. I think Chamath summed it up the best, right? And two of the smartest capital allocators are selling their stock, and on top of that was Satya Nadella. He was referring to Elon and Jeff Bezos. And you have inflation at the record highs, and you have a Fed that is due to raise rates, and you have a record high in the markets across the top, every single major index. What's going to happen next? And Tony has literally been charting stuff, and I think he literally goes, "What's going to happen here? What do you think is going to happen?" Like, Tony, what do you say with these charts?
Bro,
Like,
I
it's
said
amazing.
literally, where do you think this thing is going?
Yeah,
And the
it's
amount of, and I honestly, I even commented, because the amount of people who were saying that I'm dumb, and like I probably like have this appearance on Twitter as like one of the biggest bulls. However, I don't get bearish often, and every time I do, every freaking time I do, like, Rahul, you call me and you're like, why didn't we listen? And so, like, knowing that stuff has gone parabolic is one thing. Knowing why it went parabolic is another thing. Like Nvidia, fantastic company, metaverse pump, gamma squeeze. That's why. So when that unwinds, like, and this is actually, I just thought of a great trade for myself. I'm gonna go look at this later. Go find the option expiries where, like, the biggest FTM people, which is like, F the most people, where when that gamma can unwind. So, like, you're seeing that everybody is running names for different reason, and like the only reason Fang and Nasdaq continues to pump up is those 5 names. Like, if you really removed those names, you'd see the underlying grossness, which, like, we posted a lot of that on these, like, up here, like Luke's look at it, like the Nasdaq over the 200 DMA, right? Like,
I
it
pinned it back.
is 2018, 2020, like it is this, right? And like, we've broken under everything. I will say though that, like, the only thing that I could think of that might change my mind is Monday we start seeing big pumps in these growth names and stuff, because I do think that obviously a lot of this is starting to get priced in, because there's not as, we haven't even really done any tapering yet, we haven't even raised rates, we've just said it, and we've been saying it. So, like, this does seem like a temporary liquidity trap, but I will say that, like, if we don't rally in the next 5 days, it's going to be a prolonged down. Like, half of me thinks we're going to be very bullish on Monday.
Can you, Tony, just, I'm not here to assign you work, but I think since you've had such good thoughts on this whole Luna and UST thing, and also just potential next steps in the market, you might want to put on like Sunday night. I think this entire space, every single question has been like, what, like, I don't know. I just think, like, the more we can share, the better, the more we can help people. So I think some just food for thought for you, Tony.
Definitely, man. I will. I need to get Riley in the lab with me too. I'll get Luke too, and we'll put out a good thread. But, like, it's probably my single most bullish thing for the next year is Luna and Terra.
Yeah. No, Adam, any comments to
Adam? No, I appreciate you guys doing this kind of in real time, and it seems like looking at it one day in advance is about as helpful as you could get. I mean, and so it's been super helpful. So thank you.
Yeah, no, you're welcome. Thanks for joining. It looks like Sunday, Tony, it might be the time we need to kind of, just for the Pounders to come on. I know we've been on for 2+ hours. I just feel bad ending this because I'm getting bombarded nonstop with questions, and I feel I just want to kind of give back a little bit. I mean, none of us are perfect, but I feel like if we can help, or people are, like, enjoying listening to this, then why not? So thanks for joining, Adam. Thanks for joining, everyone. I think, Jonathan, you were next. And KT, we haven't heard from you in a while. If you want to jump in, please do. I'm sorry, we have 20 speakers, so anyone wants to jump in, just raise your hand too with the icon, and I'll get to you.
Thank you very much for inviting me to speak. I think the inflationary point is key here, because it's across the board, so it's global.
You see the Chinese government sort of making moves to control commodities, which obviously is a flight to safety. And also they sort of somewhat corner the market there, so especially in regards to rare earths. And I think the downside risk here is we haven't seen any demand destruction. So, if interest rates are going to be raised early next year, and they start to continue to be raised all throughout 2022 and into 23, you're actually going to see demand destruction. So consumer sentiment will change, and there will be demand destruction.
Yeah, spot on.
So it's really complex. And what does any central bank do? Because we've had 12 years of aggressive expansionary monetary policy.
The
So
problem is there's not much they can do, right? I think this is one of the few things in their toolkits that they have to try to curb inflation. But the problem is we've gone through a recession in 2008, right, where you had Lehman crash and the financial crisis then. And then you had a record, like you just mentioned, a record bull market since then. I think we had a good dip in 2013, 2014 as well, and then obviously in 2018. But the realistic biggest, I guess, huge drawdown, or if you want to call it a recession, was 2008, 2009. And I don't think the Fed's ever figured out how to really raise rates or control financial policy in a way that anytime they say raise rates, hawkish, anything, every single time, 2013, 2018, 2020, 21, it's the same reaction. So I don't know, Tony,
I
PT,
don't
anything you
have
want to add to
enough
that?
visibility of what the VCs are doing, but if you've got private equity and VCs and the big funds all sort of
So
calling
this is
time on
what
it, that sort of
this
tends
is
to
what they're
imply
saying.
that probably they
Yeah,
know the
this
Fed
is
and
what they're
other
saying.
central bank policies will be hardening. So they'll be starting to raise interest rates, which then means the cost of capital goes up. So
Yep.
therefore, it's not making free money. I mean, at the moment,
Yeah, cost of
you've
capital
got
goes
free
up, which
money.
goes for them. Yeah, no, because the market, you can throw anything on and you were making free money because the cost of capital was zero, right? So you can put any discounted cash flow up and say this is how much I want to generate in future and products and how you put selling, and that's going to change. And the VC point you mentioned, I mean, I don't work in VC or private equity. I work in the financial industry, financial data. I work at Fitch Ratings. It's a credit rating company, but I don't have any exposure to VCs or private equity people personally, like that are that big or huge capital allocators, but the All In Pod has covered this, and many other, I guess, influential, venture capitalists have said this, that these guys have had record runs in this decade because they've allocated to software and tech. So I don't know where they go, but a lot of them have been trimming.
Crypto.
They're going to crypto, right? Like
They're all going to crypto, dude.
Where
Every
does
single
Solana get money
VC,
from, right? Tony, it was all, I think, a lot of it's VCs.
all of its VCs,
So,
all the money from Sol is VCs.
yep. So, yeah, no, KT, I think you were going to say something. Sorry to jump.
No, I mean, most of them are trying to figure out, like, that's what I kind of feel, right? Like, what are we going to do with our long term? Where are we going to put money into? Like, if you have seen some of my tweets recently, I sold my ultra long position on Apple. And how I kind of accumulated position, also my Tesla position for that matter, is every year I used to go in and say, okay, Apple opens here on January 2nd. And then I'm like, okay, where can I sell my puts? And I used to sell puts, and I used to collect premium over like 8 years, and I used to aggressively sell puts when the VIX shot up, like how it did right now. But the situation right now, why I kind of sold off my Apple position at 170 was because, like I'm not seeing any like this is me who is extremely bullish long term always, but what I kind of saw with Cisco, with Qualcomm back in the day was, like you see these elongated flagging pattern where now the Fed is saying that the inflation is high, and folks thinking that, like inflation being high is good for stocks like Apple, Facebook, or Google, Amazon, Microsoft, etc. But the thing is, what might happen is they might keep the inflation there, and we might see some elongated flags, like how Amazon has been 13 months or so. You can go back to the weekly chart out, like there's literally been no growth on if you have held that stock for about 13 months now. So that's partly the reason why I'm kind of selling off some of my positions and waiting, and right, like I 100% agree with Tony on the the crypto cycle and all that. But like I feel going into 2022, like Q1 or whatever, I think cash is king, where you will see that window of opportunity, and it is not right now, where you have falling knives everywhere. Every stock out there is like at -30%, -40%, and that's exactly what I've been advising people. Don't try to catch it, because like unless and until you try to see where the market kind of senses like the fair value or whatever, and nobody of like me, you, or anybody cannot judge it. Like it's a cumulative effect, right? So until then, I just want to get out of the market and just watch. Yeah, just a couple of points that I wanted to raise, because about people trying to figure out what to do, and this has been something that I have done. I have been selling puts on Tesla too for a while. I got assigned on Tesla stock a couple of times last 10 years, but it has been good. I mean, I trust the company and all that, but right now I don't see a huge upside like we saw in 2020, 2021. Like I think these 2 years kind of spoiled us as traders and investors. But like we can probably see elongated flagging patterns for the next 24 months maybe. Who knows? Uh, that's how I'm managing my portfolio right now, and that's my view on it.
I just can't get
Smart
over.
man.
I can't get over this tweet, Tony. Literally August 24th. It's pinned above. I'm going to read it out loud because it's absolutely insane. We were calling this kid crazy. Like, I'm not joking. I called him. I texted.
Bro, I almost
What
got
the hell?
ousted from my company.
What the hell are you talking about? We were going to kick him out of PTT. No joke. Like, literally, we were just like, Tony, what's wrong with you? Liquidated a bunch of personal holdings today for JPEGs. I mean, look where we are. 4 months later. I mean, yeah, he was a little early, but if you made that move, I mean, it was the best transfer of capital you could have made this year. I mean, congrats, Tony. I gotta give you a
Thanks,
public shout
man.
out
I mean,
because we gave you a
I
lot of
appreciate
shit,
it.
so you deserve credit for that.
Yeah, I mean, and I think a lot of people think I'm trying to FOMO people into it. I just think that a lot of people, they need pushes more than they think to like start learning. Like I never try to say buy this, buy
And
this.
by
You
no
have to buy
means
this.
am I saying I'm investing in NFT. I didn't do this. I didn't
Yeah, you're
follow
not,
Tony.
and
I'm
it's okay.
not. I made fun of him for it. But what I'm trying to say is that it shows to you how important it is to try to be one step ahead rather than trying to catch up 2 steps behind, which is what a lot of us are trying to do and make sense of this market right now.
Yeah, I made way more money in crypto than anything else this year, and I just think that like, I think that trend's going to continue. I mean, I will also say though that like, there is a high level of bearishness, and like I'm feeling it, and now everyone else is feeling it, but like nobody was feeling it when I was posting the where do you think net and Nvidia are going charts and all those other charts, and I posted that tweet. I gotta find this one and we'll post it to our whole where I was like, you realize that these 5 names holding up the market are the only reason that
I
everyone's
remember.
not buying. And so like those things have already happened, right? Like we can say like we're super bearish now, and like SE is down at 240. Like I think that we're close. Like we're actually close towards a situation where you're either going to get like a multi-day flush or like a 1 day really big flush, or maybe just like another week of straight spillage. But eventually, and come Jan 1, there are people who still have to put money at work, and you will put money at work in stuff that's the best situation for like your valuation. And don't forget that people do have a longer term perspective, and there are people who will continue to buy the dip. But it's just now there's less people who want to buy the dip, and so we're not saying that the markets are completely dead, right? Because it's still the biggest financial markets. Well, not bonds are, but like this is like up there with this financial markets. So if you really want to think like a year out, 2 years out, like do I think SC will be higher in a year? Yes, I really do. Like I'd probably bet any money. Like do I think that net will be higher in a year? I don't know. I think that those
Maybe
are the
not.
decisions. Those are the decisions you need to think about and make, because that is like there's too much. So I would tell people cut out all the noise and then say, okay, let's say that my portfolio gets cut 50%, okay, from here, whatever. Let's say SE goes to 120, whatever, this and that. How much of my portfolio do I want that to happen to? Okay, so then allocate a percent to your cash. Then once you're there, work backwards. You're saying, okay, well, interest rates go up. What companies have a ton of cash? Facebook, Amazon, Apple, Google. Like that's why I'm saying they may crash, because if rates start going up, they have that capital that they can then put to work and get that 2% on 3%. Like they're not going to get affected by it because they don't need to loan out for money to do new business ventures. And
Yeah,
plus
but then you have demand destruction. So then you're looking at it from a market perspective, which I appreciate, but look at it from a human perspective. As interest rates go up, we're already seeing an energy crisis and crunch for electricity, so principally generated from gas. As prices go up, consumers tighten their belt. So then you also need to reflect on, right, okay, which investments do I have that are dependent on consumers? And are these necessities or are these luxuries? So that's something you also need to factor into.
100% agree with you. I would add one more caveat to that, though, is while those are all inflationary measures, and like not even counting all the deflationary measures of the Fed and COVID and this and that, consider automation. Consider the fact that the reason the workforce is lower is because we really don't need people putting parts together in car factories or factories anymore. So
that is super deflationary for consumer pricing.
Well,
And so
good point. So look at Chandler from the 70s. So automation. I mean, our work, we have level 5, level 6 factories, so completely automated in some circumstances. Let me tell you, the amount of energy you need to power those means that your costs go up. So yes, you get greater efficiencies, higher quality of good output, but there are also implications for that. So it's not just quite that easy. So of course, you see all of the the financial central banks and all of the politicians talking about automation. Automation is going to get us out of this. Well, automation is going to be all well and good if the cost of a loaf of bread is $10 or £10, as it would be in the UK. So you've got to look at all of the various different sort of demand drivers and weight your portfolio. That's why I said earlier, if you look at China, they are basically going to try and corner the commodities market. Okay, why? Because commodities are used in all of these new technologies, as well as in building an infrastructure. If you want to build a factory, you need iron and steel. If you want to build silicon, you need polysilicon. You need,
and it's also a play against the U.S. because 70% of commodities are based in U.S. dollars.
Yeah. So for example, you look at the stocks that are booming at the moment, like Tesla and others. Tesla is completely dependent on the Chinese supply of cobalt and lithium. Okay. Most of the polysilicate and all of the substrates that are used in making lithium battery cells, and in producing most of their silicon, 60 to 70% of that is controlled now by China. So again, you need to look there. There are geopolitical elements here. So this is the reason why it's such an interesting time, but also it's a very confusing time. I mean, I like a lot of other speakers who are in this space today. I don't know where to go, what to do. Is the Fed going to pull a crazy Ivan and say, forget the tapering, we'll go to negative interest rates? They could do that.
We will never. They'll never say that.
No, but you could see something crazy happen. You could have China decide, what, actually, we're going to just restrict access. Like the US has restricted us access to their markets. We're going to restrict access to the supply of commodities to some of their industries. Loads of things could happen. That's why
okay,
it's so
much,
difficult.
honestly, these are actually pretty good points. And you think about in the coming years, could China do this to make a world power move? Absolutely. But I think that's further down the line. I think we have so many issues currently right now that that might be a little by little, then all of a sudden thing that we can deal with in a few years. But I will say that all these ambiguous effects, when you really look at them, I think if you net them all out, it sounds deflationary. And so I don't know necessarily which headline for which week will end up being deflationary or inflationary. But I do think that you can see that you have tax selling, you have COVID, you have Fed tapering, you have automation, you have vertical farms, you have, I haven't even checked the price of gas because I've had my car in 4 years because I have electric cars. Those are, and I know, okay, and then the argument of how do you get electricity? Well, okay, but still, I'm just saying that it's really hard to understand where we're going because it could be inflationary, it could be deflationary. It depends on what side of the bed Powell wakes up on, and I think he'll walk it back. I really have to say that I think he'll walk something back, or he'll say we won't raise, we'll taper. That's the smart thing to do. We won't raise, we'll taper slowly first. Once everything's stable and we get unemployment to where it is, then we'll start the tapering, because he's doing things against the mandate now. And if COVID causes more people to not be in jobs, and if inflation,
that's his main goal, to get people to work.
He has 2 jobs only, and they're both
Who said
really
that?
crappy.
I don't know who spoke just now, but I don't know whose comment that was. But yeah, you're right. Adam, I saw your question. I have looped in Tony into that because, like I said, I don't invest in NFTs, but this guy's deep in that space, so hopefully he'll look at that once we finish this. But Greg, I see you have your hand raised, so go ahead.
Yeah, Tony, I'm curious on how you build your watch list and what's a signal for you. And my question is there's the heads of table that you guys have been talking about the past year. All their charts are below the 200-day. They kind of look broken. I'm referring to Square, SE, Shop bounced off the 200-day, but that could break. Fiverr looks severely broken. So I know you're changing, your thoughts change as you get more inputs and more data, but if SE goes to 200, is that where you start leveling in? How do you build that watch list and how do you make those decisions?
So I think, this is where I wish that we it's hard to just do so many because we're doing so much different content now. It's hard to maintain the same thread of what we were talking about. But I said on the pod a while ago, before T-Doc dove to zero, I was it can't be ahead of the table anymore because it's the poster child for COVID. Fiverr is one that's completely eluded me in terms of questioning. I've taken a drawdown on Fiverr now, but I think that I think that's also just because of the like which companies have the most free cash flow environment. So like, I think Fiverr's here to stay? Yeah, I think Fiverr's actually like the last quarter was really good. But do I think that like SE at 200 is something I'll be legging in? Sure. I'm surprised SE didn't hold the 200 because I know a ton of fund managers have been waiting for 200 for SE to buy in there. But I think one thing that you really want to consider is like, so Square for me, and that's why we've been pounding the table so hard on Coin. And like, I like Square, but it was also like, I did say that I sold my Square for Coin, just because it's like payment systems are payment systems no matter what they are. So if payment systems are moving towards like blockchain, and I know Square is changing its name to Block and everything, but too little, too late. It can. I think. I mean, obviously they're a massive payment company. They'll
My
figure out a
concern
way.
with them is the whole Bitcoin maximalism go 20.
Yeah, that's also a thing. Jack is wrong for being a Bitcoin maxi. And I love Twitter. I love Dorsey.
I mean,
love
dude, you
Twitter.
met the co-founder of Square, right? You interviewed on
Right.
the pod, Jim McCleve.
Right, and it's still bullish because I don't know how he was able to say this to us, but he said like there are so many ways that they can just flick the switch on for profit generation. And so even if Square is like just one of the other 20 payment companies, if they like do have crazy profit generation coming, people will slam it. But I think that in terms of making my watch list right now, I'm looking for companies that are not dropping the most right now. And as much as like that sounds counterintuitive, because like some of the best return gains will be when Fiverr bounces or when like Twilio bounces. But like looking at the companies that haven't dropped the most will give you a good sense for what won't drop the most in the future in like really scary times. And so like looking more at SE, Shopify has held incredibly well. Even Nvidia, and Tesla. Like,
Facebook is
those four names
Facebook is down quite a bit, isn't it?
Yeah, Facebook is down quite a bit too. I mean, but I think Facebook, I think people just prefer to buy the other ones. Like, I don't think people like Zuck as much as Google or
It's just
Amazon.
Zuck, yeah.
Yeah, I agree. Square also has a nice
Um,
competition too, like there's many other companies that do the same type of thing. But
Is this Bell? Oh, Bell speaking. Bell, what's your? Do you have a question, Greg? Did I answer your question?
no, I just had a comment. I was just talking about Square.
Oh yeah,
and,
one second.
whatchamacallit.
One second. I just want to make sure we answered Greg. Greg, did we answer your question?
Yeah, I mean, not totally clear. I mean, it's like NVIDIA has held up the best in this market, but again, it feels super extended. And like Tony was saying, like that's been the metaverse bump. So I don't know. I mean,
Right.
look, I'll be following your guys' tweets in real time, but scary times out there. And I'm just, I'm watching Square. Never thought it would be at 180. So I'm like,
I never thought SC would go from 380 to 240. It's insane, man.
yeah, and like,
right, and that's why it's hard for me to answer too, Greg. Like, I mean, it's one of those things where I think we do need a total flush, and then once we get the total flush, the ones. So it's basically a game of like musical chairs. Like how high does SE stay before it bottoms? How high does Shop stay before it bottoms? Because the second the narratives change and stuff bottoms, you have new flows, you have new institutions, you have new money pumping those things, and those are new bases. And so it's like we're in like halftime right now, and I don't know how the second half is going to go. So what I will say though is it is incredibly difficult in my mind to believe that Google will go down 30%. Like unless it cannot go down without the S&P going down 20% or 30% as well. So as much as I hate to say it, like the Fang guys nailed it this year, even though I think it was for the wrong reasons, they did. And so, looking at the bigger companies is probably them for the next couple months.
Dude,
Just until
Tony, you were
things
giving me
settle out.
shit for holding Apple
Yeah,
120. You remember that?
yeah, Rahul. I just publicly admitted I'm walking back my statement. Like,
I was
as
told
much
to
as I
sell
think that
Microsoft at 250. Come on. I'm just messing with you, man.
No, I know. We both have these things. It's just crazy to think that those things are now higher valued than many of the stocks that
It's
are
insane.
growing
No, I
3
wouldn't
to
have
5
thought
times.
this run up
Right.
from Apple.
I didn't have it in my bingo card, and
Yeah.
I murdered last year. I got this year very wrong, in some places very right in others. But
Yeah.
I think that happens, right? Like
I put out a tweet that said literally everyone tries to be so smart on Twitter. You could have bought Apple at split September 2020 at 120, which wasn't even the split low. It was actually 105, and made 40% in a year and not have to worry about anything.
Yeah.
Simple.
Google's up like
Yeah.
70 or 80% on the year.
Yeah. Google, Tesla, Apple, like you said, yeah, but no, you're not wrong. I'm messing with you, and I think we both
No,
go
Rahul,
back and
I do.
forth.
I am wrong.
Yeah.
I did say that when conditions change, we'll all change. I think that FinTwit is a very strong echo chamber. That as much as I want to be bearish all the time, and I do say it, then the people are like, why aren't you talking about stocks? Why aren't you bullish? Why aren't you pounding sides? People want to hear what they want to hear.
So the thing with you, Tony, that I really appreciate is you're usually, even when you're wrong, you're right in something else. You know what I mean? So like you're always looking at things and studying all the different kind of movements that's going on in the markets. I think you get a lot more flack than you deserve. But I think it's just the polarizing nature. It's just normal, I guess, for people.
I like to make my I totally agree, and that's cool because like I think that you have to stick up for something and say something, And so like a lot of people are scared to make definitive calls, but otherwise you don't know what you've ever said. And that happens. Like I think this year, like I'm still holding SMFR, that one's gotten absolutely crushed, but that's so in line with every other growth stock, right? Like the newer companies that came out this year have been crushed the most because all the companies that did well last year also got crushed. Like if you look at Roku and you think Roku's down 50% and Mealy's down 50%, how is everything that's newer, less proven, and more long-term growth perspective not down more? Right. So like, I think people are always asking me and like they're always tweeting like, what do you think of this stock? What do you think of this stock? I don't think anything specific about any stock right now. I mean, I think that it's a very much so completely correlation trade to anything high growth and less free cash flow. And eventually that changes and that bottoms out. The problem is we don't know when. And the good thing is we're closer to the end of it than I think we are than not.
For sure, Tony. Aman, do you have a question? Arman Anand?
Maybe just one follow up to Tony's point. Like there's been this flight to quality, and so maybe if Google, Apple, Amazon, if they do get hammered, maybe those are going to be like a very safe trade. If they go down 10 to 20%, like it would be safe to throw some money in there, and like those will hold up better and they'll bounce back stronger. And like you might miss Fiverr's move from 120 to 210, which would be a nice game, but at the same time, it's about preserving capital and protecting your portfolio. So thanks, guys.
100%. And like I will say, like we're gonna come out with like I have learned an incredible amount this year. Like I think last year spoiled the crap out of us. The beginning of this year spoiled the crap out of everybody. And then people believe that these companies got to where they were, and I believe like even SC last week I was like it's probably fair valuation considering it's not much higher than where it's been value wise. However, there are many times where like if you look at Amazon and Google and all these other companies' histories, they've had 40-50% drawdowns, and they don't when they get bigger because it's a game of liquidity. The more liquidity you have, the less likely you are to have a huge drawdown. And like if you look at the charts and like the amount of people that have options and the amount of positions, the amount of funds that own those FANG, and the amount of like volume and transaction on like SPY, QQQ, and that all the funds that track those have to own Google and Amazon in large amounts. Like it's almost like a game where the rules are you buy these and you do okay because everyone buys. It's like it literally is an echo chamber Ponzi. And by Ponzi, I don't mean like the house is going to come crashing down. I'm just saying that's the way the money is moving, right? Like because some fund buys it goes up, and then someone else says it's safe and it goes up, and we know it's been here forever, and so they all go up. And so I think like to your point, it's hard for me to assume a world where Google, Amazon, and all those companies go down more than 20% at this stage in their life because as much as we have all this fear coming down the horizon, people have to invest and they have to put their money in somewhere. Most people, there's still a lot of ETFs and funds that have to be fully invested, and they will be going into those safe names still. And so I think it's very much so we'll keep winning, and then of course there'll always be new winners because SE was $14 like 2 years ago.
And 25% of every dollar in an ETF goes to those mega cap techs. So
at least,
yeah,
especially if you're talking about a tech ETF, it's 50.
Awesome. Well, we've been running for almost 3 hours. I think this is a great point to call it a space. I think this was super engaging, very helpful. I hope we were able to answer your questions. I hate, plugging ourselves in, but what I will say is, pounding the table, you have us on. We're going to be on a lot more. Give the handle a follow, Tony a follow, give Luca a follow, give me a
and
follow.
give Rahul a follow. Yeah, absolutely. I mean, Rahul put together
the reason I'm saying that is because if you follow us, you'll be notified when we're on. You'll see all these questions that we're talking about. We tweet, we talk, we try to cover this all the time. So it's something that we're going to continuously do. We have a lot of spaces lined up. We're part of Torture Spaces Spark program now, and I know we didn't have a podcast this weekend because we felt that it might be better. We were going back and forth that just have a live Q&A, right? I mean, Tony literally woke up for this. I mean, Luca and I have been in the lab pretty much since yesterday. So yeah, look, this was great. Thanks everyone for joining in. Tony and Luca, anything to add before we sign off?
No, you guys are the bomb. I would just say everyone just make sure that don't try to make strong moves right now. I don't think that it's a time where if someone asking about margin, please don't margin yourselves. Live to trade another day. It seems horrible right now, and ARK is also at 92, and if you take away Tesla, ARK is at 80. So if you consider that growth is down 50% from its highs, are we approaching possible bottoms? Maybe. Do I think that Monday and Tuesday will be a huge tell? Because if it is based on majority of it being tax selling, which would make sense because those stocks had the biggest runs last year ever and cap gains are changing. So therefore, if you're selling before December 3rd for the 30-day wash rule. we don't bounce in growth on Monday, it'll probably be like a nasty week until Fed. Just keep an eye on that. Like I'm not also like if we bounce Monday and then drop Tuesday, right? Like it doesn't mean anything, but you want to see a sustained difference where like everyone who's been selling has stopped the selling on Friday, which it could be because you saw that big rally come on Friday afternoon. It's just really hard to tell,
Sure.
you know, and very, very rarely am I super indecisive. And I am right now. So you have to wait, you know, patience is a big thing in the game. With that being said, Pounders.
As you always end it, Tony. I love it. Luca, anything before we kind of sign off?
Yeah, you know, I would just once again reiterate, you know, you don't need to make any big moves. And I would just wait for confirmation within these markets and wait for, as I would say, the waters to clear up a bit. They've been a bit murky the past few weeks. Just wait until the water clears up. There's no need to go risk on wait, you know, right now.
No need to go all
Absolutely
in
no
on
need.
weeklies for no reason, you know?
No,
Yep,
there's zero
definitely
need
not.
for any of that. But if you do want a sector that's been relatively strong compared to the broader market over the past month and week, semiconductors have actually been relatively strong along with energy. So those have been two relatively strong sectors. So maybe for you traders out there, that would be an area to look if you're looking for some bull side trades. But that's about it. Pretty slim pickings right now.
Yep.
So yeah, I just recommend just relax. You know, just wait for the market to give you confirmation to go in. You don't
Live,
need to rush.
live to trade another day, man.
That's
That's
right.
exactly how Tony puts it. And like I said, we are gonna be on Spaces a lot more frequently. We know people really have a lot of questions. I'm getting DM'd if we're gonna run this again and how often. Trust me, we're gonna be on. That's why I said just follow our handles. We'll be posting. I have the next Spaces flyer. I literally texted it to Tony while we were talking. So we'll be on a lot more. Trust me. I know there's a lot of questions, and I don't know if we got to everyone, but I hope this was helpful. We put in 3 hours today, and we'll keep doing this. Right? This is for the community, for the Pounders, and
Yep.
shout out to Pounding the Table and everyone on the panel. Thanks for joining.
Yeah, when the market's not doing the best, I think spaces are always the best way to get to people. I think, you know, asking questions is much more than hearing something and not knowing everything that's going on. So, yeah, like I think people are like, you guys don't do podcasts when the market's down. Well, we do spaces to try to talk to you even more. So, just tune in for the next one. We'll have one at least every week. If not, I mean, we have to do 2 a week. I think we're hosting.
Yeah, we'll be on very, very often. And Luca also puts out a daily recaps. So if you want to understand what's
Yeah,
going on day to day,
I listen to it every day. Yeah, shout out to Luca. Go follow Running with the Money. Just a quick, like, few minutes recap every day, just telling you what happened in case you missed it.
Cool. With that being said, enjoy your weekends, guys, and we'll be back soon. Thank you.
Peace.